good luck with that. And some of them may have a degree that's not even marketable right now. Just imagine that, right? We all been there, right? I got fortunate to get the rest of my little student loan debt, kind of cleaned up by way of the by the Fed, which was, it's welcome regardless. I'm not gonna turn my eye to that and say that,
Right.
they owed me that, but that's just one less bill. That's all I say. And I'm grateful for that, to the ancestors. So regardless, we've been down that road. We've been in those camps. We've been down a lot of different professional paths in our careers and our lives where we've gained, exorbitant amounts of skill, right? Know-how, knowledge, wisdom. And that's to be, honored again, because again, you're taking those same raw skills and, trained and programmed skills, and you're applying that to the market in which most people will come out of a college institution and go right into what different industries, different sectors of that value of society, right? Globally and also, locally within the nation. So we sit at, from 30,000 feet up and look down at the landscape, right? The employable market, the industry, the innovation, the change of charter when it comes to, what's hot, or what's trending, right? Market wise or whatever, culturally, whatever, because if there's a price tag to be adorned to that, we get excited for that. Why? Because if there's a means where, in this case, Wall Street can get behind it, put money behind it, then it can offer up a great opportunity, right? So we're literally seed sowers, right? And for whatever, for whatever value one may look at it that way, we are seed sowers, right? Well, Apple been in business before a lot of us even began investing, possibly, right? Obviously. Doesn't necessarily mean that they're still not in a growth state, right? That's how you would look at it. You coming in brand new, right? Your dollars are just as much as potent and powerful as the person that's been in there since 1980. Of course, they may have gained more, right? But you're in at a moment where you decided there's still growth still left, right, in that soil, right? There's things that they can still produce, or their level of maintaining has caused the stock to still bullishly drift favorably to the upside, because there's still new investors are coming to the market every day, right? Which is odd when you think about that, right? You're like, man, is there anybody else out there still want to invest in this market? Like, yeah, like every day, right? There's a new person, right? It's weird when you think about it, because we think about COVID. We think about how people came into the market because of COVID. And you all were very privy to have a lot of friends, peers, family members that were coming to y'all like, hey, man, I ain't got nothing to do. I'm home quarantine, man. What's this stock market stuff about? I know you've been talking about it. You've been posting about it. It's all over your social medias, right? What can you do to help me out here, right? You think about that seriously. You became the vanguard. You became the change of charter for their life in some way, because you introduced them to potentially another means of income, a supplemental value of income that can become primary if they so-called choose. That's the key point about it. It can become primary if you choose. Well, what is entails that you put, again, time to research and, fish out exactly what it takes to be, profitable and knowledgeable, and knowledgeable first, because before you become profitable, but what it takes, right, to be able to perform, in the markets, right? And it doesn't necessarily have to be you become a glorified trader, right? Because that's the hardest part about this market, is trying to trade the everyday volatility, right? Which is weird if a person's not built for that kind of life, right? That extra volatility, the anxiety that comes along with buyers and sellers, and 180 reversals on a dime, like Barry Sanders style, right? You pivot on you and break your ankles, right? Allen Iverson style, right? Like, what do you do with that? Seriously, you're like, man, I just put down a stack on that there, and you just did a hard reversal on my little $1,000 looking, ain't nothing. Like, man, hard that thou, right? That thou, right? That. But that's what makes the market also unique, right? Because again, being a good read on not just what we are trained to in terms of, what are the fundamental reasons behind opportunity in the market, right? This particular stock, whatever, this industry, this sector, this indice as a whole. If you're trading, one indice over another, you favor one over the other because it has a basket of stocks, right? These ETFs, even understanding even the networking side of that. Right? We rarely go into that, but just think about what an ECN is, right? When last time we even talked about an ECN, right? Exchange was with the what is it? The electronic communication network thing value, right? How these different assets are routed right through the system, right? And there's not many as it used to be back in the day. They compounded and basically a lot of them because of the SEC, but they are still out there, right? Ultimately, beyond that, then you have what they call CFDs, right? Y'all guys definitely know what CFDs are, especially ones who come from the sure trader, the trade net side of things, right? They'll contract for differences, right? They are a derivative of a derivative, right? Think about that, right? 2 times removed derivatives, right?
Remind me that documentary. What's his name?
Facts.
Yeah.
Yeah, Michael Boyle.
Yeah.
Like, you could you explain to me what is a swap and what is a derivative? And the brother was like, "Yeah, I've been watching you like 30-something years." He was still there. He was just stuck. He still couldn't.
Yeah, that was funny, man.
He couldn't even explain what that was. But that's interesting because again, we are, thrust into this with the mindset that we want, we want the profit, but the education is priceless. Why? Because again, there's no recertification. There's no need to produce a certain level of credit to be honored for that time in the game, right? What they call substantial work, right? You put in a certain level of work, you met a certain criteria or quota, hence here's your grade that puts you in a passing status. Well, again, here a trader can come in right off the street with no knowledge. Just someone say, hey, here's a buy button, here's a sell button, here's how you fund it through your bank account, you set this up, this, that, and the third. Hey, here's a trade to even trade that we're going to trade today. Just follow our lead and you should be okay. Right? That guy maxes out that trade, every aspect of what they have in this account. And it may be one of those bangers, like a day like today in the SP 500, where we banged up a percentage 0.5 after dropping, literally around about 0.5%, and then just rebounded, those typical V-shaped recoveries, right? And then that person makes, again, easily, 200-300% on that dial, right? That person just made $3,000 that had no underlying skill set whatsoever. Besides, okay, well, he might have heard of the company of that stock, right, on the consumer side, but have no clue about trend analysis and the fundamentals and what's the price action spectrum. What does that really entail, right? What is investor sentiment, right? Besides the fact that he got it all the way, caught up in FOMO because of the same thing, right? Someone said, hey, this is a stock you might want to trade. I'm in. Right. So that's interesting. So we're going to talk about that a little bit. What's going on, film? Everything. I see the building. Shout out to you as well. Over there on the tube side. This is great. And we'll talk about that a little bit too, right? So did Biden and Powell cook something up? Well, that goes into, in my opinion, it delves into exactly what we're talking about a little bit today too, in terms of, the trend trading, right? Assessing the duration of long-term trade and investments. Why? Because, when you think about even government seats and policy, I know this is kind of off script a little bit, but it's on script to what we do as investor traders. Why? Because we're trying to always map out who are the key players, the manipulators, and those who are, power brokers, leverage people that also have a strength value to add to the marketplace. Of course, when we're talking about the Federal Reserve, which is really the comptroller, right? He is the purse carrier, right? Or she, whomever that person may be. They're literally controlling everybody's livelihood for more ways than you can even imagine. Think about that for a moment. The Federal Reserve, which is a private organization, they're not even really a part of the government. They are a private arm of the government, hired for help, voted by senators to do this work, like an off-script little, enclave of Jesuits, if you want to use that kind of term, right? All right. They're working for the monarch, of course, but they can't necessarily be fired by, one particular, individual. It has to be a collective agreement. It makes sense. So they have all this power over your livelihood because their ultimate goal is, like you hear Jerome Powell say at all times, right? To infuse maximum employment into the American economy, provide price stability, false price of goods and services, right? And be there as a backstop for the infrastructure value of the market. In this case, we talking about the bonds, the treasury market in terms of how, things that have a higher value of a risk profile in that regard. You got to keep all that stuff balanced out. Now, again, if their goals is somewhat top rated, when I say top rated, they're leveled towards really protecting those who actually own assets as opposed to who pay taxes, which is still an asset, owner, because if you pay tax, you basically saying your taxes are, providing you the acquisition of what? A share equity stake in this American corporation. But you and I know, all of us known here, yeah, that sounds good on a sound bite, but the market is always going to protect what? The players, the power brokers who are actively engaging it. And they will tell you again, Main Street is supposed to be the barometer of our economic backdrop, but it's not, because we witnessed literally even since 2008 subprime, lending crash that happened in the housing market, how they shifted a lot of that narrative away from Main Street, even though they was taking advantage of, meaning Main Street people taking advantage of by these subprime lenders and banks and the Lehmans and all these, again, corporate crooks, white collar criminals. They still made it as if, Main Street is not, I put this, they figured as if Main Street is not competent enough to be able to what? To have that kind of level of responsibility as, the torchbearers for the economy. Yet they will put that same energy again towards saying a Wall Street banker or an investment broker or a hedge fund, which has an agenda. See, Main Street people don't have an agenda. They just get up, they go hard, they work, they're trying to provide a better existence for their life, their children, their future, right? And they're just doing whatever they can in the midst of their existence to make things happen. Along the way, hopefully they get initiated to the ideal of investing and trading, because that's where you get a leg up in life. Well, supposedly, right? You get your leg up by being either a business owner or asset owner, right? One way or the other, right? Both are synonymous in a lot of ways, but you have to know how to, again, think about, the duration of your life at some point, right? When we go hard, we live like there's no tomorrow, but at some point, you're gonna start thinking about the duration of your life. 10 years, 5 years from now, 10 years from now, when you think about the idea of having kids, what kind of backstop financially will you have in play, right? And I can just assess you just a lot of my years. And I was like, man, I don't, what do I really want to do? Right. Military, college, private, corporations, all this stuff. I'm just going through life like a lot of people, like, man, what do I really want to do? But as we all know, guys, if, given the opportunity, if we'd have had someone sit us down at 5 years old, literally 7 years old, 10 years old, 13 years old, 15, right, up until 18, and just give us this kind of game. Hey, here's the world. This is what the world moves off of: buyers and sellers, supply, demand, right? Right. Producers, distributors, sellers, people that level, right? You want to be on that side of the spectrum, because from there, your worth can now exponentially grow literally overnight if you're in the right place at the right time. That's the duration of how you should set forth opportunity, even when you think about trading the markets, and also think about long-term portfolio values too, right? You have to be able to sit yourself down and say, how much do I value this $5 I'm going to let go here at Taco Bell, right? At the 7-Eleven, at the Quick Trip or wherever, right? It's weird to think about that when we just blow money indiscriminately, right? Just kind of, laissez-faire kind of mentality. I'm just out and about. Yeah, I just passed by the store. I'm gonna stop by it, right? Because I saw a car that I might like. You go in the store, buy a pack of bubblegum, right? You guys out there, they're single out there trying to, find your nice little, future woman, right? Right? You stop by a little place, you don't even shop there. You saw something that probably caught your attention. You're like, oh, let me go up here. You go in there and buy a pack of bread. We got about 8 loaves of bread at the house. Like, I'm gonna buy another loaf today, right? Just so I can get in line, right? But whatever that value is, again, you have to be able to, again, know exactly why you're putting yourself in such a position, right? What's the cost analysis here, right? For us, again, when we're trading and also investing in opportunity, we're looking for things that are that seems to have homogeneous growth, right? If there is a thing out there in these days, right? Right. But things that have linear growth value attached to them, right? Be it through the continuity of good management, or just, good consumer base that is always, showing up, even when other sectors may be struggling, right? Because they may have a niche market, right? It may not be as ubiquitous as what we, look for in terms of the company that we may like, whatever. So there's a lot that goes within that, but ultimately we're talking about being able to, when you find such opportunities like that, or you get excited about such opportunities like that, can that lead to the inevitable treasure that you're looking to get, from the stock market, right? Through the value of the Forex market, right? The currency pairs and just being fluid and learning how to move between, these different national, currency scenarios in terms of what the economies are producing, not producing, et cetera, be it crypto, same way, right? What are the things that are moving, that market, right? So for us, trend trading, the treasure of trend trading becomes synonymous with learning how to also back down off of what an invasive thesis where we feel like one way has to be more dominant over the other, right? You have to have the ability to switch up. Why? Because our ultimate mandate, if we had an ultimate mandate like the Federal Reserve, like Jerome Powell, right? Here's his maximum employment and all this other stuff, right? Ours would be what? Maximum value being able to what? Succumb to the proper trend, right? Following the money, as one would say. Why? Because that's what's going to maintain you if you're looking to be somewhat of a trader. But we all know, the long-term investment game is that's where the plug's at, right? The plug is in the long-term value, right? It is, right? Because you got to tell yourself, again, 5 years from now, 10 years from now, do I still want to be, operating, in this space and hopefully at a high level, right? Those things matter, right? So that's what we're going to talk about a little bit here today. Why? Because a lot of things that are happening in around the marketplace, especially coming into the month of June that we were already planning for, falls all the economic data, that stuff is getting ready to get flushed through the system. Well, Wall Street has to really make a hard stand right now. Like they have to make their stand right now. This is like their moment. This is their, run on Normandy, right? The beach, or Normandy, whatever. Right? This is their, their Hamburger Hill moment, right, if you will, right? For my veterans out there, right? This is their, they're on their front line, right, of the battle here. Because now, knowing that we're getting ready to go into what we call a very tight season, where the interest rates are now starting to, really show some kind of form of effect to the market, even though they're still minute in the grand scheme of things. We're talking, minimum value here of interest rates in terms of what we need to. That's right, Oprah Brand, June 15th. All right, you go live again for the next FOMC meeting, which is going to be a firecracker moment. But if you think about it from a place of, again, as investors here, you say, well, again, what's on the table, right? What are we having to deal with here? That could prove to be a tailwind or a headwind for the equity markets, right? Which consequently affects the Forex market, which consequently also affects the crypto and sometimes even the value of the commodity markets, even though commodities have been the ultimate hedge against a lot of these high growth, high beta stocks or whatever. They've been kind of the inverse correlation to those, but nonetheless, all those things do signal, you have the ability to rebalance. You have the ability to cross the line and go into other different assets to play, into the weakness or strength of one or the other, right? So for us, of course, we know that, market-wise, coming into this month of June, we got a very, very important FOMC meeting coming up. That's, of course, that's that June 15th deadline date that we already know about. Supposedly, we were supposed to have started, and this is weird because I got some conflicted data today. I was watching Bloomberg this morning and a few other things, but we knew that coming into this month of June, that literally the first day in June was supposed to be the start of what? Do you guys know what was supposed to be the first day of June? What's supposed to happen for us economic side of things on the Fed side? Anybody want to chime in on that? What?
Balance sheet runoff.
Balance sheet runoff, right? Thank you, Obadon, for that, right? We're supposed to have our first balance sheet drawdown. In this case, the balance sheet, value that they had put in place under the last FOMC was supposed to be a minimum, right? They say a minimum. That word's not mine, right? A minimum of $47 billion supposed to run off, right? $47.5 billion to be exact, right? You want to parse straws there. $45 billion runoff, right? Of the balance sheet, right? And, again, a great portion of that being obviously T-bills and the rest of it being mortgage-backed securities. Now, interesting enough, the mortgage-backed securities, they had actually a hard date for it. They were saying it, around mid-June, right? So it's like, well, which is it? All right. Does it start the same as June 1st, or you run it somewhat in concurrent value to when y'all typically will pump money into the housing market, right, for mortgage-backed security, right? Is it the 10th of the day? Is it the 1st and the 15th? And I'm thinking that's what it is. It's a 15th hard date. Unless I'm wrong, I'm gonna go back and look at that. But if they're not going to do the portion of the runoff for the mortgage-backed security MBSs until June 15th, right? Consequently, on the day of the FOMC meeting, then that tranche of money out of that 47 billion won't kick in till then. Now, there's ways we can go look that up and see, but I still think it's still ambiguous because the last time we looked at the New York Federal Reserve website, it was still showing at some point, even though they're supposed to have to stop QE, it was showing that they still had it on their ledger, that they were still, providing QE for mortgage-backed security. And I'm like, this don't make any sense. Are they going to update this, or this just, this is? Are they secretly still add money to it and saying that they're not? And then they're like, oh well, we didn't, it had a grace period to run off whatever we had left. Nonetheless, it's still a part of that learning aspect that we're trying to figure out, especially even for myself, right? Because I don't claim to be an economic guru. I'm not a Muhammad Arian or whatever, but I'm learning respective to that of what I can, account for. And that's, going to help help us in our own individual perspective as well, because we want to get comfortable with learning these different data points, why they matter, right? Most people are like, yeah, man, that stuff a little bit too complicated, but just give me a ticker, right? Throw me some tickers, right? Right? Give me a good trade. Give me a good setup, right? Is it A setup, B setup, or C setup, right? But again, we are different. Right, over? Right?
That's all they do, man. Can I get a ticker? What stocks, man? What stocks?
Give me a way to make some money, right? Again, the ideal of that, if you ever was left to your own devices, what would you do with that money you just made if no one else does give you a ticker, right? Then you'll give it all back, right? Give it all back to the house. Right? So we don't want to do that. We want to be responsible, as much as we possibly can, because again, we do see this as a long-term opportunity, right? There's no strikeout here. There's no penalty box here. If you mess up, you done for. That's not how this stuff works. But that reality does have value if you only working with a limited value of resources, right? Money don't grow on trees, obviously, so you want to make your money count. Like I said before, if it's $5 and you just stop by the little grocery store or the side store and you got food at the house, you live about a mile or two away from the house, a mile or two away. Is it worth to stop and blow that money on that when you got food literally at the house about a mile away from the house? Right? It's that kind of level of discipline, I guess, is what I'm trying to, what I'm aiming at here. We have to become disciplined in knowing how these things work. Why? Because they fold into the greater trend analysis, right? They fold into the greater data point that, tells us whether or not markets are, at a point where we're starting to, reach a little equilibrium, or we still as softness and weakness, and there's still more downside. Of course, that's the great debate right now, right? The book or the great debate, that would be the scenario that we're dealing with here today. Wall Street trying to figure out what are the things that are overhanging the market that we have to somewhat flush out before we can continue to just run hard like we got no tomorrow, right? We know this, Fessenden calling it climbing the wall of what? They're climbing the wall of worry, right? Essentially, when you look at what happened with the market even today, from a trend analysis perspective, we're gonna get into some fine line details of it too. What was the energy of today, right? We got duration of good numbers today. We had some retail value numbers that came. We had private payroll came out today with the ADP numbers. All this stuff was in concert to what we even got, previous, in the week that were, showing those same kind of values what we've been knowing for quite a while. There's still softness in terms of overall growth in this economy that is still seemingly being overlooked and somewhat watered down by this bullish drift thesis that, is not that bad. It's bad, but it ain't bad as it could be. But yet everybody want to invoke the name of Paul Volcker. Every now and then, they rarely invoke the scholarly value of Milton Friedman, right? Which really, makes them, have nightmares at night if they use his name in vain, because they know he was staunch in the scholarly side of things. He didn't get caught up in the, the fairy tales of Wall Street that, is risk on all day, every day. Again, that's the mind of an analyst or a banker or, that kind of person. Why? Because they got clients. They got to keep their clients excited about flushing their money into the system, because they get paid by value of the fees, right? which is a conflict of interest, right? Because again, you can't force the market just to be bullish for your client. Now they have ways of, jerry rigging the market or crowbarring money into the marketplaces sometime and causing, abnormal, V-shaped reversals and things of that nature. But then you ask yourself, on the bigger macro backdrop, are those things sustainable? That's where we come in, right? Because you have to be a good judge of character in terms of this marketplace, right? Each individual stocks that we're trading are just that. They're financial vehicles, right? They're going somewhere one way or the other, right? Either they can stay on the straight and narrow, like old school, they say, stay on the straight and narrow, right? Right? Until something changes. Or they could be a little erratic and all out of, all out of the lanes and just, swerving, right? Either up or down, whatever the case, it's our goal to make sure we stay within the confinements of what we can account for, right? Knowledge-wise, right? And if the market is giving you a lot of conflicting signals, the best thing you can do is pull back and do nothing. Like literally, I took maybe like 2 trades the entire day. And I didn't even want to take those. It was so weird that when I watched the market reverse off the lows, when we saw this double bottom here form here, literally around 4,750 or like 4,750, where around that point there, first thing I told myself, if we flush below that, of course, I'm going, melee ham on puts, right? I'm going melee ham on puts because we've been here before, right? What is our modus operandi, right? Until something changes, we stay within the confinements of the trend, right? All right. But we still know what patterns are. We know what, the trend cycles look like, right? In this case, when we think about, having failed here at 416.24, which is the previous high up here, right? I'm gonna go to the bigger chart in a minute here. That was the pinnacle for them to kind of overtake. Once we, number one, it wasn't that it was already known once we had a double bottom here at 407, because everything from that point on still had to work. It had to work and prove that it was worthy of investment, right? Now, clearly, we didn't even cross over the VWAP just intraday here when speaking to the trend trader value of us now, even the, the day trader energy, so to speak, if you will, right? We didn't even have, where's my thing here? A really even confirmation bias even at VWAP until we got over 4,955, right? In this case, you say, well, markets love $0.5 a whole number, points, right? Or marks on the chart, right? So instantly, most people thinking like 410. Why? Because we've had trouble at 410 several times. Look at all this chatter here at 410. At this long line here where you had, resistance down here, of course, around this 4,950, 4,960. But getting above 410 would be like, okay, that's next level, right? That would be that next level perch point, so to speak, right? Well, markets can really get excited about, potentially trying to build higher lows, right? Which we're in the business of building higher lows if we're thinking the market's in an uptrend. And consequently, we on the inverse of that, we think the markets are making lower highs, right? Lower highs denoting that of a downtrend, right? The broader picture or the bigger picture of the stock market right now is still slated in what? Are we still in the downtrend or are we in the uptrend now? That's the question we have to ask now. What do you guys think? Are we still in the uptrend? Are we in a new uptrend or are we still in the old downtrend or are we neutral right now?
Talking about sentiment. Still bearish sentiment, but we're in an uptrend today. Today we're in an uptrend.
So short-term trend, right? So short-term trend, or in this case, we'll say intraday, right? That's the technical name, how we look at that. This is an intraday, bullish reversal trend. And you say, well, okay, from a weekly perspective, which is great because we get a chance to look at these things, right? Well, we can easily go to the weekly chart and see what the week looks like. You know what I'm saying? We can go to the monthly and look what that looks like. We can go to, different time frames and see exactly what the market is showing us. And how is that, setting up in the grand scheme of the overall trend, right? As we move further and further to the left, right? Look to the left if you want to establish a value of the potential of the future, right? So just hindsight here, just if we did that just from this perspective here, it begins to make little bit more a more granular side of a granular picture, right? You can see things, you can parse the straws a little bit and see exactly the bigger picture that Wall Street is trying to muster here. Clearly here, we've had a very jagged bottom, a very jagged bottom here, right? no clear, defined, definitive value to it. Just kind of stop, pop it, drop it. But we have a definitive bottom thus far at 308, right? Thus far, we had a big bottom at 308. And everything inside of that seems to be what? Building out as a what? A big old what? Rounded bottom, right? A big old rounded bottom as of now, right? Which is subject to change, right? As we like to say, right? So that's why, somewhat hinting to that question is not necessarily even right or wrong. Do you think we're in a proverbial bottom? Have we reached the proverbial bottom now and we are in an uptrend? All right.
Absolutely not.
All right. So Chris says not. All right. And we're just playing out the value of what we have in terms of our short-term pivot points, right? We know we definitely have another one, sitting around in terms of support, which is what we kind of clipped up off today, right? This 4750 area, right? This 4750 area has really been, of late, we'll just say they've been reversing it off that point like it's just, something, magical about it possible. I don't know. But we'll just say 4750, where within that little 50-cent range, right? That little spread, right? We'll play the spread because we know how Wall Street works in terms of spread. We'll say it's a 50-cent spread between the bid and the ask within that 47 to 4750 range value as a what? Equitable support that we can count on a pseudo side for now. For now, it's still pseudo support until they prove us that, the trend is, definitely strong, right? But it's notable because we can see clearly here, if you see on how I have my crosshair up on the screen here, the small screen here, you can clearly see that there's support there, right? We clearly can see that there. We have areas here, the double, bottom that we got listed today coming out of yesterday. Previously back on what, on the with the 26th or whatever that was, 25th, right? Of May, right? At around that area, kind of, trending at around 47 and change, maybe even close to that. Clearly back on, the 17, right? 17, 16, 17 area of May as well. Of course, when we kind of, made a nice little run up to 48, kind of stalled out there. So we have multiple points of interest there, right? Places where we've touched that point. And, the latest, I should say support or holding of that area has now proved to be what? More of a bullish drift trend, right? This is more of what they call a bullish drift because the volume is obviously what? Lower. We know about when you have what? Sloping or descending low volume green bars. When you see that on the chart, typically it denotes what? A bullish melt up after you've kind of already kicked, volatility in the teeth, which they did. They was able to kind of kick, the VIX off the 30 handle and everything from that point on under 27, just from my calendar. Everything from 27 VIX on down is now problematic, right? With them knowing that if they break below 25 on the VIX, it really can get ugly. 24 would be like, okay, we finna eat, right? Because we know that area has what? Major areas of support on the VIX, right? So let's go to some of the bigger charts now. We'll go into depth on that. We'll get our little fine-tooth comb and magnification glass out, right? If you will. And we could do the business of being who we are. All right. Oh, let me get my little camera. It's the session here. I'm just going in over here. All right. Peace, everybody. So, we got the family shirt on today, right? Peace, power, profit, right? All right. We're definitely on our tribe wear today. All right. So that's where we are in terms of again, mapping out what that looks like, right? Mapping out what that trend may look like. Short term, long term, or is it just this is just, typical Wall Street shenanigans, right? Because the data points that we've been getting on the economic side, you guys been posting on them yourselves. You've been really, really good stewards of being able to keep a lot of the family informed. You guys, shout out to you all, over Chris, over Brandon, all you all who are posting in those groups and discords and so forth. If you're able to, different areas where you can kind of, keep everybody else also informed as well. Right. Because it trust me, it matters, guys. It trust me. I was born in that, I was fireborn, bred in that kind of energy of being a data chaser, right? Data hound provides you what? It's like, man, you got to love it because that level of knowledge that you're getting on a constant basis, and reading those articles and reading those different data points, that's your part of your autodidact value, right? That's how you learn, right? Be it by reading it, writing it down, or whatever, taking it to memory, visually, whatever, it helps, right? It helps, build your conviction, right? You've seen it before, you've heard it before. Okay, I know what this is. I've seen this before, whatever. It's great, right? It's really great, right? So just kind of using the market here. Let's go over here real quick to we can chart. What's going on over Rich in the building? I see, all right. I see you in the building, right? Well, we got two Riches, obviously. We got Brother Rich B, then we also got Brother Rich Boy, right? Y'all may know him, affection from the old Discord days, right? My brother, my fighting arms from the old Sal days, right? We used to go in over there. I mean, like all of us, over Brandon, of course, Brother Rich Boy as well. I mean, excuse me, Rich, Rich Boy, obviously. But man, we used to have some great sessions back in those days too, right? Them old 2-3 a.m. sessions in the morning going in, right? Man,
everybody still up 3 o'clock, 4 o'clock in the morning. People still getting it in.
I gotta go to work 5, 6 a.m.
Right. You gotta go to work 5 minutes.
Right, man worked at Apple. You was like an engineer at Apple. That joke got to be work. He's still there. He's still there like 2, 3 in the morning. Like, dude, like, yeah, don't you got to go to work? Going to. Tim Cook gonna be like, hey, bro, you all right? You all right, buddy? Yeah, I'm good. But again, y'all know what it's like. It's all about the, that's the sacrifice. That's how we look at it. It's the sacrifice, right? So I'm excited because for us, this stuff becomes universally, no-brainer for us. Why? Because we already made the commitment, right? We're all in, right? Necessarily mean we just all in the stock market. We're all in the commitment to get better. At some point, we're staying close to the information. We're staying close to the plug, right? In this case, it's a lot of the information that we're getting from these publications, the websites, whatever we can pull from YouTube, other traders, investors, right? That peer-reviewed trial, right? The Ubuntu theory, right? In this case, it's the thesis, right? So I love it, right? I love it for that, right? Because again, I know this is only going to serve us, in more ways we can even imagine on a long-term perspective, right? So just looking at the market here again, from the long-term perspective, this is on the hourly chart of the SPY, right? Y'all know we are big proponents of what? Levels, right? There's levels to this. As you hear people say a lot, man, there's levels to this stuff, right? There's levels to this, right? Right. And it truly is, right? It truly is, right? So let's stretch this little here out because we hadn't done this one in a minute, but it's pretty much where it's supposed to be, right? I mean, you can pretty much see the extent of it, just knowing how, the market has been operating here in around these levels here. I think it's right around, around that point. But it's not hard to see exactly what's going on here, right? We know that, there is a, when you think about people talking about, there's different types of trade, right? You got, trend traders, you have, fundamental minded type of traders, you have confluence traders, right? The confluence value is very synonymous with, being able to move with the trend, so to speak, right? When directional biases change and pivot, things of that nature, or front running that value of, a change in the markets, right? That matters, right? So our latest, value here, right? Of course, on the short-term note value here is that, we had a small, gap value here coming off of, the gap up from the previous day. And, to backfill that will be close to that of, what we attempted today, right? We got down to like 407 and change. Matter of fact, this candle here would be the only one that would have tested close to that. We got the 40704, right? That was your low off of this candle right here, intraday, right? And it happened, if you think about it, the first hour of the market, right? It happened literally the first hour of the market. Wall Street will say, well, hey, that's our gap fill, right? We'll systems will go now, right? Systems will go now. And we fill that gap, that VPOC, that verging point of control, whatever you want to call it, everybody has different terminologies there. That means we are a go, systems all to go for a particular reversal if we can muster some kind of energy to get Wall Street excited, to bump the markets. All right. Even though we had in this case here, the candle hit 403, over here we had 474. So 1 penny. A 1 penny spread was enough to Wall Street for them to turn it. And it's like, we out of here. But for me, it's not even so much, because that's like parsing straws, right? We're talking about fine-tooth comb analysis here. Right? If we blow this up here, of course, you guys can see a little bit more clear here. It's a game of wicks, right? the game of wicks, right? We're playing the game of wicks now. We're back to this now, right? All this indecisiveness, right? As opposed to just full, body candles that's showing you strength in terms of buyers. But we know there's a lot of people who still have a fickle mentality about the stock market now. They're not sold. They're not all in on this, right? On this so-called bottom theory, right? I got to call it a theory until it changes, right? Because it matters. You say, well, man, okay, yeah, it would have been nice if you got, Apple came down here when it was at 380, Apple was like, 137, right? Tesla had got down to like 620, somewhere around there, right? So these are like, man, we could have bought those dips. Yeah, you could have, right? Or, you could be the type of person who says, well, I need, more confirmation, right? I still keep seeing and hearing about, this bigger macro headwind that's still surrounding the markets beyond inflation. We know, the supply chain issue narrative is about the most closest bullish, talking point that they can speak to now. Why? Because that's a more time-sensitive value based upon if a few other people just get out of the way of other people and let them do their job, that will also help, ease that pain of the supply chain issue. That being the biggest controller of the supply chain issue is what nation? Anybody want jump in there? What's the biggest? Who controls the supply chain, right? If you want to put it in that perspective, who controls it?
China,
right? Not even up for debate, right? All day, every day, they the world's biggest production factory, literally on the planet as a whole, right? They are a production factory, the entire nation, right? The whole entire country, right? They are still somewhere in the industrial revolution. Some would say, man, they on the back end of that, they're telling off a little bit. I beg to disagree, because the fact that they're still bound up, or they're the world's biggest rare earth mineral, holding company, literally, all right? They bound up all this, the land around literally the world that has great deposits of mineral resources. So at some point, they're going to be extracting those mineral resources for what? To build off of them, or to sell them to everybody else, right? So yeah, down. That's telling me that they're not done. They're not done expanding. And one of their greatest issues that they're dealing with, especially in the mainland, in their metropolitan areas, they're dealing with the whole issue, dealing with smog and pollution, stuff like that. So they are in the business of the climate change industry too, because they want to clean up their environment, because they've been doing all this heavy polluting of the earth through the industrial revolution, which on this back end aspect of it, as opposed to the one we dealt with back in the mid 1900s. Well, we dealing with bigger use case of fossil fuels, and the need to have more coltan, more manganese, right? Y'all know all the copper and all that stuff, right? They're digging up craters all up around the planet, right, to produce these little handheld devices and tachometers and this, that, and the third, just to even to build a sky ride, a high ride. It's crazy. I mean, think about how we're just we're just doing stuff, but at some point, for them, I know I'm kind of off script, but it's on script. It's going to have to amount to, either somebody else is going to have to start kind of being a major power broker in those spaces too, or if not, we're all going to be subjected or beholden to China when it comes to whether we get our hard, tangible goods, right? Those products that we all love, and our flat screen TV and all that stuff is not coming directly out of China, but we just say Asia as a whole, even though all parts of Asia are not as far as the CCP confirmed, right? The Communist Party, right? You still got South Korea, right? South Korea obviously is an ally of America, right? And in South Korea, one of the greatest the greatest electronic companies on the planet resides in South Korea. Who do you have to know that company by any chance, guys? What is the greatest electronic company on the planet? One of them, right? Because I know people they're gonna push back when you say what it is. I have to believe they top one. Say it again. Somebody said that?
Samsung.
There it is. Right. Right. They coming out of Korea. All right. To me, they are the top electronic big dogs on the planet. Sony, we even think about Sony. Sony is not Sony is not American. Right. It's weird how people still think Sony is American. Some people still believe Sony is also American. It's not.
Right.
Right. It's crazy, right? They all in there, man, Sony PlayStation, man, stop. Man, America ain't built nothing, bro. We sold all our rights upstream. But I mean, you think about that again, they are really power brokers in terms of the things that we love. especially on the consumer discretionary side when it comes to tech items and things, whatever. And I mean, the Apple iPhone is not even built in America, like of all places, right? Right. It's the concept was birthed in America, but the productivity of it is what refined in China, like Foxconn, Wuhan area, all this stuff. Like, man, you like, dude, like seriously. So if China ever wants to spite us, they can just shut down, which they did, right? They put us in another Cold War beyond the tariffs. They put us in a softer, a offshoot soft Cold War by value their shutdown dealing with COVID and their zero policy, right? That has a lot to do with our marketplace, especially our growth stocks, right? Growth stocks are definitely going to be more of the tech sector laden value, right? The QQQs, right? The XLK, right? You know what I'm saying? Your guys are already familiar with these plays because you know what makes up those collections, those baskets, right? And if we're going to have the kind of economy that's going to be built upon innovation and sustainable growth and building out even our clean energy initiative that comes along with hydrogen fuel cells and lithium and possibly nuclear power at some point, right? Getting back to a place of that being the kind of front runner to deal with the fossil fuel industry. That's going to take growth stocks, technology, exactly, right? Technology to produce those kind of those values, right? And those are bigger picture values because we're thinking assessing trend, right? We're assessing the treasure of trend trading. And also the value within that when you think about assessing long-term duration on investments in trading, which we know the bigger banks do obviously come out of tech sector, but there's also sidebars, right? They're derivatives, right? Those off the beaten path companies that make up components of that a certain sector, right? They're the fillers, right? They're the help meat, right? They're the helpers, right? Right? They're producing the Miss Millie pies, right? Right? If they want to, they can do that. Right? They can really throw a whole company off, but they can just sit on on whatever tech they need, that cog holding up the whole machine. Think about that. So it's not hard for us to be able to make a good assessment on what our market should look like, right? In a 3 to 6 month window, right? In a 9 to 12 month window, right? We talk about a fiscal calendar, right? On a quarterly basis here, you can be able to kind of somewhat surmise what you think markets may kind of can give you an outlook, or focal point of what that may look like just by understanding even the macro backdrop of the markets. Make sense? Y'all with me there? All right, you guys follow me there. I want y'all to really, really get, in tune to that idea because a lot of times you'll try to chase short-term value and you'll lose yourself and not really, relate back to your bigger picture thesis sometime because the markets get you caught up, and churned up and, you might be in your feelings about the market, in some kind of way, and that's fine, right? You're trying to, again, figure out, where's your equilibrium, where's your balance, right? Where's that? What does that look like? And one of that has to come with you being able to do establish what trend is, right? What is trend? Again, we're talking about bullish drift. Are we talking just, short-term trend reversals? Are we talking about just a simple double bottom, right? Are we talking about, a massive breakout value here, right? In this case, when we got above this little 415 area here that proved to be very a synonymous value of resistance at this point, even coming back over here, we got some chatter all around this area here. We're talking about, hold up, let me move this out of the way. Back on falls back on the 8th or 9th, or basically of May, early in the month of May, right? Before we really broke and went lower, and now we kind of right back to the area, right? So we say at the beginning of the May, we was trending a little bit higher up here around 420 area, 430 area, right? We can narrow that down and look at it more precisely here. We don't have to guesstimate here, but just use it as a backdrop there. I want to kind of keep keep this chart in somewhat our vantage point of what we want to look at for as levels, because I think these levels are very important as of now to assess what trend looks like, right? We're talking about trend today, the treasure of trend trading or assessing trend, either long-term in your long-term portfolio or just your short-term, outlook, right? So again, going back to around that first of the month of May, right? We're finding ourselves, oh, come on, chart, don't be acting up now. All right, we're finding ourselves somewhat, around this area here, right? Around this area here where we're trending at around the 420s and, kind of topping out around, close to that, the inevitable 430, 428 area, right? We'll just use that as for now. Now we talked about this literally 3 or 4 days, not even probably longer than that, maybe a week or so ago, about what are the areas that we're looking for if we are able to, number one, either to get back above number one 400, right? But outside of that, we know big resistance. We're going to be sitting around 4,445, right? We already mapped that out. Clearly, you see one of our little, resistance bars there, 406. I want to say 406, but we, between 404 and 406 was a massive area of opportunity we want to look at and say, this area here is going to be very problematic if we can't really break above those areas, right? But if you're thinking at that point that, since we worked hard to get off this 380 bump here, came back, double test this area here within this head and shoulders pattern, right? Which is the inverse, right? Clearly, y'all see that there. We spoke about that before. It's the inverse head and shoulders. Well, we've all but completed that move, right? And then some. Would y'all agree with that? Right? We say here's our head, right? Here's our shoulder, or what we say, our neckline, right? Our neckline value within that there, and around that point there, if you will, right? So that move between here to here, right, would be equating to that of the breakout, right, that we got, which pushed us up towards this 406 area, right? Y'all with me there? At least back towards this 403, 404 area we was talking about, right? So that's a nice little that's a nice move in relation to being able to establish a good particular bullish drift trend if we can overtake some of the resistance points that we were looking at very, with a lot of attention, right? Attention to detail here that, markets are now playing off the proverbial these channels, right? Y'all know we like to look at them as these little 10-point channels. I've been on them for quite a while. Ain't nothing new, whether you use them or you don't. Speaking to that of how we kind of look at the marketplace, you clearly see what they look like when you look at the bigger picture, right? When you back away from your charts and start saying, man, what is market really trying to tell me right now? I just can't, I can't read it right now, brother. I'm stuck, bro. And I'm like, shucks, man, let's take that thing to trial properly, right? When you put them levels on the marketplace, everything begins to level out a little bit better now, right? I mean, look at this trend right here that I'm drawing in these white bars in. Everything inside that trend right there was just, in this case, before it broke out and went higher, was a value where it wasn't hard to read, what this looks like, if we can obviously close above this 396 at that point, that resistance, which we did. We back tested here a couple of times, and then we broke and went higher. Now, interesting about that, we only spent we literally spent 1 day inside this trend. And I would say that because, even when we closed the previous day on the 25th, we spent 1 day inside this little 10-point channel trend here. We broke an entire trend channel in 1 day in bullish sentiment. That says a lot about the energy of the marketplace. When the markets are doing things like that, they just like, bro, look, we need to leave no kind of confusion out there that we're trying to get up off these lows, right? We're trying to do everything we can to get the market off the lows here, so we can establish another pay to play kind of environment. So from that point, we'll assess and see what it looks like, going into the month of June, because we know this month is supposed to be the month that it's barbecue mildew, right? We got another 50 bips coming, in terms of rate hikes. We got quantitative tightening, which is supposed to have to started, yesterday, literally. But that's still ambiguous because we don't know what the mortgage-backed security value runoff looked like. Is that going to be the 15th, or did it start today? Meaning yesterday, excuse me. All right. So nonetheless, Wall Street is still trying to bank on this theory in their mind that their goal in terms of running the market at this point is that number one, China is reopening slightly. They starting to open up a little bit. That is bullish. It is, because again, the supply chain hiccups with that. When it comes especially to tech stocks like Apple, Tesla, right? Tesla's obviously down in production. They was losing over 2,200 cars a day in production. At the rate that the Shanghai factory was shut and locked down. Imagine what that's going to look like on their earnings report, right? When they were already been, known to be cracking the whip over a lot of their manufacturing plants to produce get those production numbers up, and they still somewhat in that 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 proving state in terms of where they got to prove that they're able to make those kind of levels of cars consistently, right? Hitting those production targets, somewhat consistently. So, when earnings roll around for them again, will they get a pass? Will they may not? We don't know. We'll see. But for now, we know that, from all intents and purposes, they're definitely going to miss their production, guidance goals that they set the previous quarter. That's not even up for debate, right? There's no way Elon, he bad, but he ain't that bad, right? He put no rabbits out no hat and doing something like that. But nonetheless, again, since then, Tesla have gotten a reprieve when it was trading at, near $600 a share, and has now since bounced, up towards that, trying to test that particular value of maybe getting that towards that 800. But we already know, sitting there on the hourly, you had a massive 200-day moving average there, right? Slamming them on the brakes there, right? Slammed on them brakes at that 790, 788 area on the 200 moving average there. And which is obvious, right? You're like, well, okay, well, you got to bring it to get through a 200 moving average on a lot of different spectrums. Now, which is good because it's turning that 20-day moving average up, curling it up higher, right? Sitting at 760, 759. You need more bullish drift, or you need some consolidation, accumulation consolidation here, right? Not back down toward the 730, right? You needed to kind of hover up at around, at least in my opinion, around 750 and higher, right? And just kind of tighten down and kind of pull that 20 moving average up higher and higher to a point where it begins to make that that kind of cross there, right? With the 200, right? In order for Tesla to say, well, we got a somewhat of a temporary bottom, we back. Because again, the way it kind of slammed down here at this low 620 area here, that was an ominous sign that, they just, like, if we lose that, then this pretty much can get real ugly for Tesla, right? Last time we've been at around that point, we're talking about, June of last year. Yeah, around June last year. Ain't that funny? We're in the month of June, and we came all the way back and did a 52-week full circle tested that breakout point when Tesla broke above the 200-day moving average here, going back in June around that 616, 620 area. Ain't that something? Look at the markets. How proficient is the markets, right? As one would say, right? Right. Since then, of course, the market went on from 620, 616 area, whatever, and went up and hit a high, it doubled, basically went up 100%, right? Went up here towards 1230, right? 1230 area, 1240 area, right? A whole 100%. A whole 100%. Like that's a whole baby, right? That's a whole baby. That's right. That went up 100% in short order time frame. So basically from June of 2021 to basically November of 2021, you're talking 3 or 4 months, whatever, you went up a whole 100%. Now that's not logical in the aspect of as if Tesla's then, again, produced a cure for cancer or something. They just began to, ramp up their production numbers. Literally, that was basically it. They began to ramp their production numbers. And, Wall Street was still in this euphoria stage of saying that, anything on the growth sector, is still fair game because we still got low interest rates. We have a very accommodative Fed. We have a risk on appetite with money that was still floating around in terms of investors, stimmy checks, stuff like that, still bode well for as equity markets as a whole, equity as a whole, especially growth stocks. Since then, we've done another round trip ticket, right? So from November to where we are today, back to June, right? Back to June. It's weird how that works, right? We came all the way down and tested those lows again. And now we're banging up against resistance on the 200-day moving average here. On the hourly, that is. On the daily, of course, it's going to look a little different. And all this is literally in relation to what we're talking about here for being able to determine the value of trend, right? Because you have to be comfortable. Guys, as a trader, you have to be comfortable going looking at this stuff, right? It should not feel like it's like, pulling teeth or, man, I don't care about all that. Just, what the price has looked like today. No, get comfortable in looking at these different time frames, guys. It's going to help your trading thesis. Trust me on this one. It's a visual. It's not even like you got to come in and tinker with a lot. Once you guys got some of the basics down in terms of understanding, charts, patterns, trends, candles, all this stuff like that, price action, it ain't hard to come look at survey a trend or outlay of what the stock looked like, on a previous trading value or plot. If you put a box around a certain area and say, what was, market look like inside this little box there, you can make a good assessment on what's going on here. Makes sense? It's not really rocket science at that point. You know what I'm saying? So it shouldn't feel like it's hard work to do that. That little extra layer of scouting the market can potentially save you a lot of money. Right? Again, in terms of your trend assessment. Think about that. So we went full circle here in terms of that, from that, June of last year, 600 to 1200, now all the way back down to that on Tesla. And now, of course, on the daily, we just barely piercing above the 20-day moving average here, which is at 26, around that same area we're talking about, on the hourly, around that 750, 760 range. But your 200 moving average here is sitting up here on the daily, literally around 866, right? So for the market to push Tesla all the way back up to 866 from this point, and that's all a whole nother 100 points there, basically, what would be the bullish drift catalyst for that? Right? It can't be production. It can only be, well, to a degree, meaning the production limit could be the fact that, again, China's opening up, and that's still bullish that they can get back to work, whatever, right? But the supply chain issue is not necessarily the biggest issue for Tesla because they put a lot of this inventory away personally in advance to not have to deal with this, like a lot of companies have to deal with because they're so dependent upon Asia for, China or Taiwan for semiconductors, whatever. Elon, I give him that little bit of credit. People stacking up a lot of supplies in advance, because he got all these new factories he's building up too. So I guess he put away supplies earlier, but that necessarily wasn't the biggest issue that he had to face, like a lot of companies. But beyond that, the production numbers themselves definitely do carry weight. So I'm just saying all that to say this. Again, Tesla being one of the bellwethers of the tech sector too, beyond, we know what Apple catching what L's, on the fundamental side, but the stock is proven to be what? Everything except, a read on those L's, right? For every bad news that comes out about Apple, on the fundamental side, on a production side or lack of a particular whatever, there's an analyst that's saying, well, it was already priced in. We kind of got an assessment what that looks like on the long term. It's not going to really affect Apple because there's always going to be a contrarian, analysts out there going to say, no matter what Apple has to deal with, fundamentally, it's not necessarily a major issue. Right? Markets are trained to accept that. Algos are trained to respect that. Right? And FOMO traders they're just going to follow what, what the crowd is saying or doing, and ultimately in the end, right? Now, oddly so, when they brought Apple down here to this 130 area, it was a tiny, tiny teensy-weensy. I'm in my Cat Williams voice now. Itsy bitsy tiny weenie, right? Right?
Yeah.
Look, y'all remember Cat Williams? A little gap down there. Look at that little gap right there. Now I mapped that gap. Right? I should have put a bar in it, mapped it out. But a lot of people, when I did the Apple assessment, on the trading side, we would just look at it like, yeah, it's gap down to 136. Right. Anytime you break low inside of a 10-point channel of any kind of stock, a 10-point window, of course, when we got into 140s, it was almost but guaranteed in my mind. So, if we get down in the 140s and if we break that 140, right, we definitely gonna go back, we coming down to that any frailty within a previous history of the chart, we're going to test that. And we did here, to the T. Listen to the T, to the iced tea, right? Look at that right there. The hash mark there sits at right around that 136.50 area, which we had a wick right there. Then the next previous day, we had a massive shadow wick off where we flushed down as low as 132. And then they ran the market back up. Why? Because y'all know if Apple goes, so goes what? So goes the market. Because they put a lot of their power on the back of Apple. Right? All this weight on Apple. So the bullish drift trend, of course, is amalgamation of all other stocks too, but ultimately they're always watching their bellwether, workhorse. In this case, it's going to be they bottom B, right? Bottom baller, right? Yeah, say it that way. We pray to G over here. They bottom baller going to be who? Apple, right? Again, it controls the entire tech sector. It controls a good portion of the S&P. Right, definitely controls XLK in a lot of ways. It controls a lot of these ETFs, these fund managers, these mutual funds, these retirement accounts that got Apple loaded, weighted down in their portfolio value. So you can kind of get an assessment what trend looks like at the value of how well they're buying up and supporting Apple. Make sense? That's just on the tech sector side of things. But it also bodes well in terms of investor sentiment, in terms of the broader market trend, because we know the S&P 500. again, lives and dies by what? And unfortunately, Apple. Right. So as soon as we see, the same kind of resistance here on the support, on the downside, which is support, of course, on the upside, that was another indication that, there was going to be some little bullish, pop or trend value coming off of, Apple at some point until it changes. Now, it ain't hard to surmise if you say, well, hey, brother, I can kind of see, but how that makes sense when I think about this market here from a long-term, perspective here, right? We draw us a trend line or a bar across this little point right here, right? Kind of right at that point, a little, support there where we kind of touched that at, around here, back over here, of course, on the, let me move this out of the way. I got these little tiny little things in the way. Back here, October of last year, right? When we touched this 136 area here in Apple, we came back and did again a 360 basically 180, right? We'll just say a 180, right? Right. We came all the way, back to see it again, or 360, however. Last time we was at around the area was kind of back again. What I was talking about, falls that gap, right? That little gap right there, right around that little gap area right there. Right. So between 130, 137, 136 area, you can, parse draws if you want. We'll just say that was a base case for what? For Apple, for now. Right. Y'all with me there? For now. So trend reversals or the value of assessing the trend is going to be determined by, again, who are the market movers who are causing either the market to remain excited about potential a risk on environment, even though you're going into the guillotine and more rate hikes, 47 billion of runoff on the Fed balance sheet, and a softening market. Why we know it's softer? Because a lot of the guidances that we've been getting from these companies, especially on the tech side, they've been revising down. They've been revising down their guidance. They're front running the bad news. Typically, when Wall Street started doing that, they're just trying to keep Wall Street, in this case, the analysts from not backing off their bullish analysts, price targets and upgrades, not, to the degree where it's more devastating in terms of investor sentiment than it is for the overall market to say, well, you know what? We already know that they're softening in the marketplace. But as long as people feel like there's no other investment out there besides stocks, right? Tina, there's no other alternative, then they'll stay in some of these stocks, right? Well, that's the big, that's the big conundrum right now. That, Wall Street is trying to signal to us that, yeah, we get it. We know there's a lot of things happening in and around the stock market, but you have no alternative, right? They've been singing that song going over a year and a half now, to be honest. There's no other alternatives, right? Why? Because the other, asset value class that are more notable for us to look at is the real estate market. What is the real estate market doing right now? Oh, but Chris, you definitely follow the real estate market too a lot. In your, summation, what is the real estate market, signaling to you right now, if you will? What do you see?
A lot of weakness. I think home sales fell like 16%. I think this last month, and mortgage rates been banging up to the upside. They just starting to decline the last couple of weeks. So, housing market looking shaky, baby.
All right, and then using signals like the XHB, right? In this case,
brothers.
Right? You start looking at the XHB and say, "Oh, these are home builders, right? Home builders set as a whole,
Even lumber is crashing. Lumber's crashing too. Mm-hmm.
Right, which is odd because they needed lumber to come down at a time a lot earlier than what it is right now, because now the cat's out the bag. Why? Because interest rates are running. It don't even matter no more about the lumber prices being high. Now they hit you across, they left you from one crowbar to one side of the head, they hit you the other side of the head with another a piece of lumber, 2x4. Right? Yeah. You can't catch a break because now the 30 is sitting at on the fixed around about 4 or 5%.
Mm-hmm. Yep.
And you're gonna have a tightening credit market. Like people ain't gonna be letting these loans go down here. What's going on over Rich in the building? Right? Over Rich BK in the building, right? Shout out to brother Rich in the building, the other Rich, right?
And the interest rates going up because quantitative tightening, and that's gonna put a hamper on people trying to get loans for cheap and trying to you're locked in on a new house. It just don't make no sense because then you're already spending more money, on goods and services, and then your mortgage is $400 more now. So it's like, do you really want to go buy a new house?
Right, minimum four by the four, right? We can 4, 5 in some cases. Depends on person's credit scenario. It's ugly, right? Now, the only thing that's saving it is because there's still a little level of inventory out there, right? So they're trying to work through old inventory. Hence, we got that from the last Zillow call, Redfin. They will speak about that. We got a little inventory out there, but the type of clients that they're now shopping to are definitely not the person that's getting ready to buy a starter home and just they say they work hard, but now that person's like, oh, they got cold feet now. Like, bro, this inflation, bro. So you know what I'm saying? It's gonna be more the well-to-do client at this point. People who already got a little extra that they can afford to snatch up a couple extra little gym properties along the way, right? Mm-hmm. So essentially that's what we're looking at in terms of even the retail sector, in terms of department stores, especially the retail stores that have a certain client that can still float their boat, right? And the lower income, spender, they're like, you can't really count on that, right? From a head count perspective, because again, that's just how the market is. So either way, the bullish drift or the trend reversal value that you're getting, look at the XHB here. You had that same hard stop at around that 57 mark, right? That 57, 57 low, 57.30 or whatever. And there comes a somewhat of a soft rounded bottom. Now it's jagged in terms of how it just ramped there, but if you look at even the little regression band here, there's a soft kind of somewhat rounded bottom, right? Mm-hmm. Yeah. As of now, so think about that. We plan up to 20-day move there, which we're gapped up from, which roughly puts us around about 61, 62, whatever, at that point there, and now we sitting up at 63. Now, again, everything looks good from the bottom up, right? Man, of course, they would love to catch that 200 move there, right? They've been back up towards that since when? In this case, if you just kind of trend line that value there, we're talking about March 2022.
Yeah, it's been a while.
Right, it's been a minute, right? The sentiment is always shifting as if not that the housing market scenario is getting better. It's just that they're working out a lot of the they're flushing out a lot of the washout. They're washing out a lot of different traders in order to get ready for inevitable what's the next chapter, right? Right. Because the bullish drift sentiment of the broader market in their mind is that even though things are bad, but there are still pockets of residual good news out there that we can still rally off of beyond just technical bounce.
Absolutely. That's why I say, it's not looking, it's not a crash or anything like that. I don't see that right now, but you can see some weakness. But like you said, there's still some info out there that you can rally off of. I agree with that.
Right. And that's what we're trying to do here, because again, what are we talking about here today? We're trying to be able to do what? We're trying to be able to assess trend, right? What's going on, Over Dollar Wheel? All right, both Open Marquise on the YouTube. I just seen y'all over there. Y'all know we in the training sessions at value. But the trades are trend trading, right? And assessing the duration of a long-term trade and that of an investment, right? All right, peace, power, profit, the family over there on the tube side, right? But that's important, right?
Two different things, yeah.
Think about that, guys. That's very important, because you still got to be honorable, right? To the schematics of understanding what you're learning in terms of your technical analysis, your fundamentals. Sometimes they're not going to marry. Sometimes they're just not going to marry, right? They're not going to be equally yoked, right? You have to go and jump that broom and then deal with it, right? Deal with it. Right? When that cat, when you said, that was my fault. You went out there and got a baby by banana cream pie, right? And she showed up on the spot with little Leroy that embarrassed me. You made a baby with banana cream pie. Yeah, man. One of them moments just struggling. Just struggling. That's the reality of how the markets are too. Right? Markets, in my opinion, are still in that banana cream pie scenario. It is still back crap crazy, right? For lack of better value in there, because there's no definitive value where we can say, okay, my conviction of being at least 70% bullish on equities on a long-term perspective, it's just not there. Some people may feel like theirs is there, right? Depends on the person. Depends on a lot of their averages in terms of their dollar cost averaging perspective. Depends on what a regular average of the asset they may be in terms of when they got that dip. Let's say on Tesla at 624, which always was a good little dip short term. Think about that. From 624, we ran all the way up to near 800. Right, that's almost 200 points in short order time frame. All right. Same with Apple, bouncing off that, that 136 point, and that kind of running back up a little bit, right?
Yeah, I was telling people because, a lot of people be like, oh, just, keep your money. Don't sell yet. I'm like, well, I mean, you got to understand if it start going past, where you bought in at, you got to be a little cautious. But since, Apple and Tesla had the stock splits, you know what I'm saying? They've been holding right above those levels. So,
man,
if they happen to pass those levels, you might want to question, okay, how long do I hold this? And how long it holds at those levels, because then you start taking a loss. And maybe you can afford it. I don't know. So
right. And therein lies the ideal of what you're assessing your long-term duration or value of a trade, right? What is your goal, right? Because we live by, in a lot of ways when we say things like that, we living by the what, why, where, and when, right? Because those entries are everything, right? In a lot of ways, but that doesn't necessarily mean that you can't there's no value where you can't recondition that entry, right? You can take that small term paper loss, right? You have to worry about having to, especially if it's a bigger position. If you put on a good starter position, right, you pay that little extra value in tax and that just to get a lower position, it may bode well on the back end, right? But that only depends on what your growth thesis looks like, right? And what you're willing to deal with. Because again, still Apple at 130, just hypothetically, we're just using the home builder because we speak about the home market right now, right? Because if we back to a place where we're trying to say interest rates and all this stuff ain't gonna really matter in the housing market, and just because there's a little extra inventory out there, we can kind of go back to normal. In this case, up here towards 185. Yeah, you're gonna really need a whole lot of hopium, right? A lot of fentanyl, whatever the drugs they're doing today. Right? That's just my opinion, right? Short term, long term, of course, there's gonna be a case when this stuff balances itself out.
Right.
But the consumer, he or she is in a very ambiguous position, because we're realizing and seeing, we know we passed the value of we passed the level of savings, maybe first, third quarter of 2021, whatever little cash reserve we had left, we blew a lot of that stuff on consumer value, consumer discretionary values, because we were just locked up and pent up in COVID. And now we're in the cycle of credit, right? We are in that credit cycle now, right? This is the worst one.
Part of real estate too. That's another part of real estate.
Exactly, because banks are looking at that credit worthiness. How much, how leveraged are you in your credit? Are you overused, underused, mid-used, wherever you are in relation to the level of providing you risk on a risk on the contractual value, dealing with all this inflationary data and tight money. What your job value look like now, because they guarantee
that's a good point,
right? Thanks for assessing that stuff. You hear a person like Jamie Damiel speaking the other day, because you did a little op-ed on him too, over this, and I mean these are the hawks around those space now. Now he don't do real directly in that space, but a lot of what they do affects those sectors, because they're still a bank, they're still a lending environment, a lending house, right? Wells Fargo, Bank of America, on down the line. They're signaling and telling you in so many ways what the economy looks like from that perspective, because they're looking at the bigger contractual agreements, right? They're not concerned with this day-to-day stuff like most people do. They're looking at, okay, how many clients, are putting on them 30-year them 30-year fixed contracts, right? Right? Who's been coming through that seem to be worthy to give that kind of level of money to, because they're paying exorbitantly in most cases, just for the structure, they're paying well over maybe 20% plus markups on a lot of stuff on them houses now, 20 to 30% markup on some of them, not all, right? Again, a house that typically $500,000, right? 0.5 a mil. Now with the inflation, it's probably sitting at around about maybe 6 and change, maybe, right? 600,000 much plus for that house now, maybe near 700 in some cases, depending on location. Right? They're getting that extra kicker, right? You can make this stuff up, right? So, that matters, right? In terms of credit worthiness and all the other things that we're talking about, right? Just having that money to lend. If you're going into a contraction with a contracting marketplace, a contracting economy, a contracting society where people are going to be tight with their dollars, right? You're talking about, future fund rates, all this stuff, talking about this 2% stuff, which is just a bunch of hogwash. And then inflation sitting up here at 8.5, we know it's higher. Europe just hit an all-time high on inflation. They at what, 37%? they crushing them over there. Europe, it's to my everything.
They hurt.
France, Spain. I mean, you got all that. They inflation is through the roof. Russia, man, that boomerang dagger. All I'm saying, that boomerang dagger.
Yeah.
Now, America think we spared. We're not. This ain't just a doom and gloom reality, because we like to speak reality and we still like to look for opportunity, but we're not spared. And so they keep trying to say that we've kind of hit peak inflation, this, that, and the third, or pulled a Dulo twist on them jokers just recently, right?
Right.
Or say, okay, if you want to accept that, we're going to say, well, we're going to call you bluff on that, call you a lie, right? Because we were thinking the same thing. You get above 100, everything from that point on now puts 100 at the what? As a support, because now you're talking about a psychological value of 100, right? People going to automatically put buy orders to buy at 100. Our goal is going to be set to buy at 100, or even if you come down and get close to that. Why? Because they're still thinking about the margin value within that, right? If you go to the oil market here, I mean, literally, just come at this stuff up. I mean, we were kind of sitting up here and just thinking that everything was just going to be all gravy, baby. It's all good, and literally on the end of the month, we're cruising up here at 119 and income. Okay, well, the market, in terms of this whole idea of going into the month of June, they really kicking down the idea that we got a handle on some of this, the SPR, strategic petroleum reserve. Right, we already depleted that thing there. Right, we didn't pretty much. That's why we knew the fact that they was going into the strategic petroleum reserve. That was in itself a dagger. That we were already more trouble than what we claimed to be. You don't go into your reserves if you still speaking that there's a semblance of a bullish energy out there, that we're in the all clear. Make sense?
Right.
The average Main Street person can't read that stuff, though. They are lost in the sauce, right? They're just going with everything that the White House says or somebody else. They have no clue how to put parse the sauce, right? And they're like, okay, we got a reprieve. Gas went down maybe $4, a gallon in some states and whatever. And then it right back up to 420, 430, 450. Then, okay, right back up near where we at. I saw a place the other day, I think it was some Modestino, something like that in California. They hit 9. They hit 9.30 something.
Hey.
$9 a gallon, bro.
Yeah, that's total right there.
Oh, you talking about some click. Time you put that nozzle in there, click, but ain't no gas in that car.
No gas in that car. Kevin O'Leary crazy behind just saying anything. He don't see inflation. He don't see, a recession. I'm like, bro, what are you talking about?
Numbers don't lie.
I'm telling you, talking about your sales and cash flow is up. I'm like, bro, you complaining about hiring a waiter and paying them $25 an hour compared to $15 an hour, and they have to pay $8-9 a gallon for gas in downtown LA. Like, bro, you crazy.
Cost of living in certain eco is just not even up for debate, right? It's like the fact that they can twist their mouth to say something like that is an extent of exactly how the economy or the value of equity in America is definitely skewed and flawed in terms of when we talk about the wealth gap effect and how these greedy corporations or people who are well-to-do because they know they're part of the system in a way where they've been able to kind of get that leg up exhaustion value based upon stock options and things of that nature that really catapulted their wealth. Now you can't hate the man, right? You got don't hate hate the player, hate the game, right? However, they can't sit high and look low and browbeat people into accepting minimum value when there should be this dual mandate. In this case, we say everybody got to do their part to help the situation, right? But we know that's never the case, right? Yeah. We know that's never the case because it's like pulling teeth to get the government to do something for the citizen that pay its salary. They'd rather take your money and do what? muck off with it, right? Give it to Ukraine, give it to immigrants, give it to, you know, again, indiscriminate things that didn't necessarily make your life a better what? Quality of life, as I speak to that a lot. So it ain't hard to see exactly what the wool being pulled over one's eyes. So when they say that it's abating and it's that and the third, we would say, well, take that thing to trial. What did the chart say? You know, what does the chart say here?
Right? Chart say it ain't over with, baby.
Chart say it ain't over. You round the bottom right at that point that we said we're gonna come down to. So we coming down, test that 100 again. We're gonna bounce. It's gonna rip. We ain't making this stuff up, right? Diamondback Energy, all this, Oxy Petroleum, Chevron, Schlumberger, Halliburton, you name them. Look, right? Like, look, bro, how do you want it? You can't have it both ways. See, Wall Street want to have it both ways. Okay? I'm a participant of Wall Street, right? I rest and live on that same reality, but I'm not, you know, clueless to understand how this stuff works. That's what we're trying to do here through these sessions, to get you to have that, you know, that extra layer, right? That, you know, you crack open another you know, brain cell and say, okay, yeah, I might need to kind of look at that, you know, from this way, from this perspective, because we're trading now. A lot of what we're trading, even with news has a trend value too, believe it or not, right? But you're on the technical, there's a trend value of news, right? There's peak news, right? There's what, you know, trough value of news when there's not necessarily a whole lot of news, right, out there. Chances are when there's not a lot of news happening in and around the market, what's happening? The market's actually either going sideways or trending down. Notice that. When there's peak news, because peak news drives what? Peak news drives what? You know, anxiety, right? Fear, right? All these different things, right? When algos start surfacing those things or whatever, the talking head, they start bringing in all these talking pundits, Tom Lee, Tony Dwyer, Dalio, they start bringing in all these people now to try to calm the market. Why? They're not necessarily trying to calm the overall value of the marketplace in general. They're trying to keep mom and pop investors from pulling out. Because without mom and pop, they have no what? Think about that, right? They have no
leg to stand on.
They have no legs, no liquidity, right?
There's no liquidity. They have no liquidity.
Exactly, because we make up the bulk of that value of the marketplace in that.
Look at 1987, man.
Exactly.
People started selling, it's over with. People started taking their money out of stocks, it came crumbling down.
Panicking.
Yeah.
I mean, you guys know this stuff. I think you were speaking over Rich as well. You know, you're talking about liquidity and all that stuff. Yeah, this is the extent of that. You know, you think about that, guys. So it ain't hard to be able to assess that. Again, for every trend, you know, they said the equal or opposite reaction value to that. In order for someone to make money, of course, someone is losing money. And a lot of this stuff, in terms of that, I saw a stat the other day where they said the Feds have lost over $330 billion of late, based upon this latest drawdown value in terms of the equity and all this, that. I'm like, how are they losing money when they printing money? That don't make sense. How are they losing money when they printed all this funny money? And the fact that there's a drawdown because people are taking profit, they pump that money for people to what? To, again, be able to have in their mind, at least have a valuable wealth effect that they still can what? I guess, live off of in their mind on the paper side, unless they taking profit, because the rest of the world was crumbling and going that so-called hell because of COVID and, quarantines and lockdown, supply chain issues, et cetera, et cetera. Well, the only thing you had is your paper investments, right? In this case, your paper assets, right? If you ain't clocking out, whatever, that was your wealth, right? Assessment, right? And then have, land, whatever, in terms of, equity value you got in your home, this, that, and the third. But beyond that, a lot of that money went again to those who are what? That percentile of people who own assets, right? The Main Street people, they're not getting nothing. They're not getting retooled in terms of what? Skill sets. The government is not providing them what? Education. If you really want to get serious, give people free education. If you're struggling even to pay off, in this case, pay off student loans, debts to help, give people a breather. Well, what's the other alternative to that? Give them what? Free education. And we're not talking about at community college, right? Right? open up these universities that got these large endowments, like Harvard got like $1 trillion endowment, $1 trillion endowment, right? Like seriously. But you get the point. We're not gonna go there because that's a soapbox conversation. They ain't gonna be like, man, well, people gotta pull this everybody, bootstrap, waist strap, hat strap, whatever. You're gonna get those types out there, right? Again, this whole ideal of the government should not be in the business of doing that for the citizens, but you should be doing everything for the government. That's the backwards hustling thesis, right? And they will get you caught up on that. Yet when you leave your pocketbook with the government, what the government do? They give your money to everybody except you. Right? So I'm gonna just ask and make that make sense. So reality is that if you got to follow these trends and follow the value of the movement of money, right? Or the lack thereof, if they're doing a drawdown of liquidity right now, again, you can't have it both ways. You can't say that there's a 100% complicit risk on value with liquidity drawdown based upon, inflation, right? And the biggest catalyst to that is, again, we talking about food and energy, which they leave off the BLS report for a reason, right? Because those numbers were they volatile, but they are the biggest cost that you carry. And they're the things that most people upset about right now. That's obviously going to hurt this election cycle coming up. Obviously at this point, to the point where, again, Biden allowing power to kind of continue this kind of hurry up and wait mentality of slow rolling, fixing this problem is problematic more so for Biden than it is for Jerome Powell. And it's very problematic for the American citizen. Makes sense? Because they don't have, again, assets they can liquidate in time if it gets really rough, right? And they're in the environment right now where they're doing They're in the credit cycle now. They're swiping credit cards right now. Them credit cards got limits, right? Even if you got a revolving credit card, it still got some limits, right? You can't just you know what I'm saying? So you only, you limit it to a degree in a lot of ways, right? So you need things to get worked out, in a way where you can have a stay reprieve, right? Or you can breathe a little bit. Now, saying all those things, right? Saying all those things, coming back to the one thing that we know to be true in terms of being able to assess whether we are, again, in the all clear or somewhat in the semblance of all clear, because we know we're not in all clear, right? That would be very irresponsible for us to say that. But a semblance of what that will look like if we're going to be bullish, bullish trend trading, right? Bullish drift trend trading, if you will. That's the terminology some people use, right? We got this bullish drift when there's low volume, right? Equity stocks are typically melting up and going higher. Why? Because that puts a clamps on it clamps down volatility. That's the whole. I mean, if you guys know that by now, I'm pretty sure y'all do. We talked about it like we two blue in the face. Every time you have low volume melt up, when they have a massive moment where shorts and covered, either off of an OPEX expiration week, right, or a month, and then what happens is if the markets or the big banks or people who are in control are able to kind of cause a stability of that of the volatility of the marketplace, and they can pump the market on very low volume, right, because you can't really have a whole lot of intraday capitulation, right? Because the market ain't all over the place. That keeps them from messing up the tape, right? Retail can't mess up the tape when there's low volume because that makes them impatient, right? They either gonna stay out the market or they're gonna jump in and get masked up if they can't read the trend properly, right? That's how you get these bullish drifts to the upside, right? You put a clamp on volatility. Now, again, using that in the same context of what we're talking about here, oil is back to where we were before we kind of had our blow off top up it towards 130. Think about it. We're right above resistance at 115, 116, if you will. That's all. That's a line that we all can see right here and say, yeah, that's clear. That's a new support, right, for oil. That's a new support right there for oil, right? Make that make sense in terms of how that's not, right? So everything clearly above that is problematic for oil, right? Or excuse me, for the commodity market in terms of it being not a easement value of inflation coming down, but it's sustaining itself, right? Now there's other pockets where it's coming down, like Chris, you spoke about lumber coming down, right? We saw earlier, I think we did somewhat last week or so. We saw stuff like like oats price, some indiscriminate commodities, they're coming down a little bit. Gold somewhat still stabilized inside of that 18 region for the most part. But again, the barometer that people checking is what? They checking that oil market. Because that's what kicking everybody's teeth at the gas station. Again, it's placed in California, got oil at $9.35 a gallon right now. You like, bruh, like, okay, I'm taking a big wheel to work today, right? I'm gonna be out there on my son, little scooter or something, a Segway or something, bro. I'm gonna leave something because this ain't gonna work. We took it on the highway on the highway. What that one out there on the highway in California over Sunday? Was that one in LA? The highway one? Well, not one. One is
101.
101.
The 101.
But Joe was out there on the 101, a Segway, a scooter, and look at him. Hey, bro, trying to get somewhere. It's that bad. So again, those are people who are gonna have major problems going into what the midterms. He said, "Well, what all that stuff got to do with the stock market, brother? We came in to learn about stock market, but guess what? You got to learn about the fundamental, ecosystem in which you're investing and trading in. Because if you don't, you're gonna get swept up into what a fool's gold thesis. You're gonna be knowing, you're gonna be not knowing how to read. In this case, read the tape, how to read trend. Why? Because if you're in a stock that's already overweight and it hit its bottom trough peak bounce and came back to its resistance, and you thinking that it's a new day in that stock and everything from that point on still gonna be what blue sky breakouts, you late, right? You didn't miss that trend. We getting ready to reverse, right? That happened in oil at 101, right? $100 a share, right? And people are starting to short the brakes off. I know a lot of people, big money people that was short. I'm definitely short oil now because they need oil to abate, because that opens up the playing field where they can get back to what? All this risk on euphoria, equity stocks and growth stocks and some of the, decent cyclical plays that they can say, we got to stay a reprieve. Now, these stocks have already fell 70%. Come on, the bottom got to be in now, but that doesn't account their PE value. That might still be a little frothy, a little bit kind of still expensive. It does not, equate to what the supply chain is going to supply them what they need to keep that kind of value of momentum of revenue starting to kind of turn the curve back to the upside. There's a lot of different factors within that is my point, right? You can't leave those things out and assessing the value of trend. It's deeper than just, a technical perspective, right? It has merit, granted, but you can't hang it on it just being strictly a technical moment, because again, XSB right here looks good on the reversal, but at some point it's gonna hit some hard level of resistance. If we keep this bullish drift, we clearly can throw some lines on here and say, well, we're gonna run into some problems here off of this 64 area. We definitely got some areas up here around the 65, 50 area, right? It ain't hard to start throwing levels on charts. That's why I say, guys, get comfortable putting them trend levels on your charts. Do it till you get blue and until you if you on a mouse on your desktop, your finger better get raw from clicking that thing so much, right? If you on your cell phone, like I do it on my cell phone and my doggone desktop. So you can't come to me and say, well, yeah, it's easy when you sit in the desktop all day, but I send charts from both cell phones and my doggone desktop. I'm working on both all day, every day, daily, right? Because I am universal to this craft, right? I'm mobile just as much as I am sedentary sitting at the desk, So to me, I want to be able to take my craft on the road. I mean, that's what we're here for, right? We don't want to be stuck somewhere where you got to be in a cubicle, all uptight. No, we want to be able to be flexible. But either way, you need to be able to diagram this market and know what's going on in any fashion, right? Mobile, small screen, big screen, whatever, it doesn't matter to me. It's a part of what we're here for, right? So every trend that we're trying to assess, or every aspect of what that looks like, it's an assessment. Again, it's an assessment of what the next potential, opportunity will present itself. Now, just looking at the SP 500, right? We're talking about trend, right? Assessing the trend, right? Assessing trend. The trends of trend trading, right? So really quick, let's go. Let me see. Let me go up here real quick. Let me go to my yeah. Let's run over here real quick, right? Let's do a little paperwork today. We can do a little paperwork in a minute, right? Let's go over do a little paperwork today. Right? So trend analysis, right? Japanese candle charts, we kind of know what's going on there. We're still going to touch this stuff because you know how this stuff go. You never get too big for your britches, right? Old school with it, right? You never get to a point where you can't go back and go through some old school things that you ain't touched in a while, right? That's how you become a good in this stuff. You got to be able to put in that work and go back to the basics, right? Over and over and over and over, over and over again, right? Now, when we talk about trend analysis, right? Trend analysis is very important, and especially in this marketplace. Why? Because a lot of people are getting caught off trend. They're so skewed on the fundamental backdrop that the market is trash, and they know it is, and they know Wall Street is lying, which they are. They fail to realize to put on equitable position that's going to mirror that of the price action. So they say, I'm going to play the contrarian side of things with my money and my mental. That ain't the best way to look at the marketplace. You can still have a contrarian trade in your mind mentally, but put on a winning trade physically with your money to stay within the value of price action and trend. That's the dual mandate you have as an investor trade. That's your dual mandate, to not go against the trend, right? The trend is your friend. In this perspective, you got to stay within the confinement of being on code, right? If you will, right? If you will. So when we talk about trend, right? We know this stuff a lot, right? Y'all know this stuff ain't hard. How do we determine the uptrend? Y'all know that it should be like a broken record. Right. How do you determine the uptrend, guys? Everybody, anybody? By what? How do we determine the uptrend? Anybody?
By looking at signals.
What do you see on the screen right here, Oval?
If all the moving averages are pointing up.
All right, what do y'all see on the screen right here? Can y'all see the screen by any chance?
Higher lows.
Yeah, it's trends. Looking at trends.
Right. So
High lows.
What it says? It says what?
High
highs and high lows.
Right. And now that's just the eco of what that looks like on a stair-step perspective, right? But y'all know we refine that thing down just a little bit more precise, right? How do you really determine the uptrend? By its what? How do we really determine the uptrend?
Use the right lane to take the I-295 south ramp.
Right, you take that 295 exit south ramp. That's how you determine that high and low.
Oh, man.
I hear them talking to you. Google Maps talking to you. Right? If you going north, that means you making what? You gaining ground. That means you gaining what? Higher lows, right? You get the miles behind you right now. Right? But you determine that uptrend by your what? Truly by higher lows. Make sense?
Mm-hmm.
Think about a trend relation to that of what? When we've hit what we call peak fear, peak, craziness, peak all this stuff, or, because everybody right now trying to find trying to call the proverbial what?
Bottom.
Everybody trying to call the bottom. TV, Jim Cram, everybody. And I'm like, bro, I ain't calling nothing until I feel like I can see a stability value of macro and micro somewhat kind of balanced out to a degree. A lot of the weekend's been flushed out the market. I mean, we need to have a real big capitulation kind of moment in the market. It could be a day, it could be a couple of days, don't matter to me. And again, there is a quietening effect in terms of what we talked about earlier, far as when we hit all this kind of peak news or peak media, right? And or just a lessening the value of media, we kind of somewhere in the middle where we kind of got rid of all these kind of chicken little moments, and the sky's falling or the sky's not falling fast enough. Then and only then can you really tell why, because there will be the level of movement in terms of money will be more equally distributed. Because now we got in trouble before because everybody went overweight. They went overweight tech during the middle of the pandemic because they had bigger moats, right? They had bigger balance sheets to kind of weather a storm. Make sense? And it was easy because all the big money people, like the institutional investors, the VC investors and stuff like that, they start buying up stuff like that too. Like you still got to stay within trend of that. Now, there still was some other trades you can trade too, granted, but the bigger weight of that went to those kind of stocks, right? And it left some of the other ones struggling because you think about it, for so long, the tech sector, the QQQs, XLK, all those like that, when they were doing well, small cap Russell, right? The IWM and stuff like the small cap Russell 2000, the Wilshire old school, right? The Russell was getting what? Clobber. Y'all remember for a long time, the small caps were just getting what? Up there were getting dusted.
Yeah.
Tech would be up big, small cap be struggling. Just like struggling, right? That's because they were overweight tech, and they were minimum value underweight small caps, so like that. They wouldn't buy them stock.
All right.
That ain't a healthy That's not a healthy marketplace. Because let's be honest, small caps really make up what? The fabric of what? America's small businesses, mom and pop places, right? They are literally the bedrock of your economy. If they're going under, if they're sputtering, if they're faltering, what does that look like in terms of, the bulk of spenders in terms of what's out there in terms of in the nation? See, this stuff, a lot of stuff ain't rocket science, but it get lost in the sauce sometimes. You listen to, CNBC, Bloomberg, Yahoo Finance, and you hear all these, people who are disconnected from reality trying to talk to you about what the middle class needs, wants, this, that, and the third. You're like, bruh, stop, right? Even though someone may know, but they'll still go on live TV and try to fit in with this get along gang of thinking that, yeah, man, how dare you speak well about the poor people? Like, you don't come in and speak well about the poor people over here. We high side over here. We grandstand over here. We say the data that's bad is not bad. It's just slightly what? it's slightly not it's slightly good, right? Again, you can never get that full, unfiltered truth with them. Make sense? For us, that's our job. That's why these conversations are important. That's why these meetings of the minds are important when it comes to this, right? We're just one of a small band of brothers and sisters come together to do this stuff. And reality to that is to keep us all what? It's to keep us sane, right? It's to keep us, balanced, right? Because you're going to need that going into a marketplace that's going to look at you and say, well, guess what? Lot size matters. You be like, lot size matters. Yeah, it does, because they're using, people need to be made whole, or to get back to some kind of form of semblance of what of balance, or again, normacy, if you will, economically, and just in terms of the fabric of society, because of what we just came out of, pandemics, and now right into an economic crunch based upon productivity being pretty much gutted, and this, that, and the third. Job market is all up in the air right now. The biggest job winners are people who got basically part-time employment, hospitality, leisure hospitality, white collar jobs like that. They're not being bombarded with application resumes right now.
Nope. And I wanted to mention earlier when we was talking about raising interest rates and and all that stuff, layoffs, getting a home. You really think that layoffs ain't gonna affect you? It's already starting with the big companies. Gonna make its way down. So do you really want to take on all that pressure and that leverage, to try to pay that high mortgage?
That's the sense of what we're talking about, as far as being able to detail, what that mom and pop spender may look like if they're putting on loan paper, right? Y'all know when they say putting on loan paper, basically that means they're putting on loan paper. Basically just mean long-term T-bills, right? Debt, loan bill, basically long-term debt, right? Coupons, right? 30-year fixed, right? Anything beyond 10 years, right? Because the standard is 10 years, right? That's typical, prime value, basically dealing with cars, credit cards, stuff like that, right?
Right.
Then your big one obviously is that 30, right? So that's why the 10X is the most important T-bill, value out there, right? That's why everybody watches, right? The 10 and the 2, right? For the yield inversion, because most people, value debt is structured around that 10-year 10-year duration, right? Yeah. So that plays into a lot of what we're talking about in terms of, again, if we are more of a credit cycle now as opposed to a cash infusion cycle, right? Then that ain't boding well for for the 10-year value in that, right? In terms of a lot of those holders are going to get maxed out, or they're going to default, right?
Yep.
Right? They're going to get maxed out, or they're going to default, which is obviously crazy, because what's happening right now in terms of interest rates, they're going up by way of manual value, by way of the Feds, and it's not just the Feds only, also inflation.
Yep.
Let me ask you this here. Is there a chart for the 10-year?
Yes, it is. 10X.
Okay, let me ask you this here. I just curious, because I haven't checked it. I've been busy a lot. Is it so it's been going down? It's been going down, right? The 10-year been going down.
The 10-year?
Yeah.
It looked like just like the oil do. Just like we were looking at the oil chart. Let's look at it real quick here. Just like we were
Yeah.
looking at
Where's
the
the
oil
10
chart.
year at?
You see that right? Hold on, let me clear this.
Is it still over the 3?
Look right here.
I said like 2.
Now you know we talking about trends too, so I'm happy we having this conversation. What do you see right there? Can you
Is
see
it-
the screen over? I know you, and you out there driving, so don't you run up in Miss Miller yard now? Don't you run up in Miss
Yeah.
Miller yard with that? Don't do
Where
it.
is it at? Where is it at right now? Just curious. I can't see it.
2.9. It's
It's
sitting
like
at
2.9.
2.91.
So what is the? So that's the
That's
peak
on the
right
daily
there.
too. Now that's on the daily because that's the only thing that really matters for the 10 year, the daily.
Okay, well, so what's the from the last low to the high? Can you do a little Fibonacci retracement? I just want to see how far it went down from that high.
I can tell you better. No, it's better to do it this way because when you're dealing with the yields are based upon a lot of what, nominal value, because it's slated towards a lot of what, real organic reads, right? Unlike just paper money coming in to spoofing the stock, right? It's dealing with what commodities, it's dealing with, fund future Fed rates and all that stuff like that, right? So it's a more organic read is my point. But just, for the sake of this, we peaked at what? 316. Like, go figure. Right? What is 316? What is 316, guys? I know I'm off the book. I put my 10 for a kufi on. What's 316?
Resistance. That's resistance.
I know, but I'm saying on the pseudo side of things, where my Kemet people at? Where my plumb line of square people?
Oh, that's pi. That's pi.
That's pi.
And that's a Bible verse.
Right. We
okay.
I was saying, what my pseudo? What they call a pseudo? Because that ain't pseudo. That we birth math, right? They keep 100, but ain't that something? We hit 316 and backed off of it. But look at here, guys. We talking about trend.
316.
And see, ain't that so? Look here. You know what I'm saying? We hit peak at 316. We came down, hit 271, right? All we did was that ping off the what? Off the top of the resistance and came down. Now at that time when we peaked around what, the beginning of May, a little around what, the first portion of May, right? First week or so of May, first week and a half, whatever within, value net, at that point, Wall Street, just say hypothetically around first May, they were making the case or in this case, that, okay, granted, we know the rate hikes are coming. We got to find a way to price them in. At some point, the supply chain issue scenario is going to abate. We got to give China time to, to work out the issue with this zero policy in terms of COVID, whatever. But, it's not in our best interest as of now. Of course, this was the commissary, not their conversation or commentary. Right now is not the time to put on the ideal of a what? 75 what?
You said what?
Right, they were saying right now is the time to put on a what?
Rate hike.
The fact that the Feds backtracked off that talking point when they were talking about it, they were talking with their chest literally about a month or two before that. They were, 75 is not off the table. Right? Jerome Powell, they were looking at all those little round trips, showing at these different institutions speaking all this stuff. Indian Reserve, the National District.
Yeah, that was Bullard. That was that Bullard guy talking.
No, it was Jerome Powell too. It was both. It was
Jerome
Powell was on the tour too. He was going all around because they, but Bullard definitely too. But Powell was Powell too, and it was like no, the 75 bips on the table. Then instantly coming to the month of May, guess what? Well, maybe that 75 basis point, because that's when Bullitt really, shined because he was the biggest hawk, right? Him and a few others like Mester and I think it's a Daily and lately Brainerd, right? Because she's been a big dog forever, but she had to switch her tone because she's the vice chair now since they got rid of the other insider trader, right? For the most part, Bullitt was a massive hawk though, right? The old St. Louis Fed, right? Old pot smoker, right? But he started changing his tune on that 75 bips. Well, we might, don't want to overshoot. We might want to step back a little bit. Look, right? Boston was two-faced, right? Boston was two-faced. He was two-side. He from Atlanta too, ain't that something? He two-side, right? He definitely two-side, right? Out of Atlanta. But definitely Bullitt changed his tune. That really gave Wall Street something to hang their hat on. Like, he was like constant hawk. And then guess who followed suit? Powell ended up following suit. Like, well, we'll maybe, but he still kept saying it from a very soft way. Well, it's not off the table, but we're gonna kind of be a little bit more data dependent, right? That last FOMC meeting, he spoke to that, even though he was still speaking hawkish. But y'all know Wall Street is. They're gonna hear what they only want to hear, right? They're gonna cherry pick the news. And y'all knows what I know. We're in the industry where what? Once they send that thing down range, when they send it, that money doesn't get recanted, right? There's no do-over or redaction on what? On a what? On a bad soundbite because the algo misread it. This morning we had bad data on durable goods, ADP. We had the lowest ADP value, since like so many years, like a lot of years since we had a bad ADP like this here, and the market still ripped on it.
Yeah, it was a few weeks. It was a few weeks ago. A guy was talking about, the market gonna go up because when a temporary bottom in, when the temporary bottom in, when market rally on bad news, like Jamie Dimon said something, and I was like, what did he say? Because he said, what did he say?
Two sides.
He said something very hawkish. It was like, bad.
He did. He two sides. He said he got quoted saying something bullish at one point. Then on the flip side of that, he turned around and said, "What? We're
economic
hurricane. What? An economic hurricane." Like he could have made it more plain what he really meant. Because they said, the first time you say something, they said, say it, make it make sense and make it plain. He came back there, said what he really wanted to say on that
tsunami.
A tsunami. Economic tsunami. And then the market just discounted that and said, well, but before that, he was saying that we still may be in a position where we can dodge recession. See, they're gonna cherry pick what they want to hear.
Yeah.
He said, we had the opportunity where we can dodge it, right? He didn't say we're going, they were saying 100% they sure. Same thing with Larry Fink, right? Goldman Sachs, they had him on today on Bloomberg, sitting up there looking all like whatever. Right? I'm like, here he go. But that joke he was doing the Hebrew shuffle, boy. I'm talking about the Hebrew shuffle. But that joke was soft shoeing a lot of his answers. You could tell he was struggling to kind of say what he really needed to say, right? Just kind of dog whistle to Wall Street because, we talking about a massive portfolio, right? He got the biggest portfolio literally on the planet. Is in his tenure under his care in BlackRock. That's the biggest portfolio management on the planet, right? We know the history, right? We can go have that conversation another time. All right, Sister Angie on here too, so she definitely know about BlackRock, right? I think she did a little contracts and work through them at some point, or she know within that kind of spectrum of how they move too. But the reality within that, what's going on, Sister Angie? Just in the building too. Shout out to you as well.
Hi everyone, I'm great, thanks. I'm in Texas.
You there over Chris' backyard, all right? TX in the house.
I'm burning up out here.
Well, you just left Florida, so you already know it's about the same.
BlackRock owning everything. Yeah,
Oh yeah.
That's what's up. Yeah, that's what's up.
Yeah. So they brought Larry Fink out. Y'all know what it is. Like he rarely have speaking, moments where he'll let his junior henchman speak, right? People down the line, CEO, all those guys. But they had him on today, right? Because they've been doing this tour of the big dogs. Like they did Dalio recently, right? Y'all know when they started bringing out people like Dalio, Larry Fink, what's buddy? Even Tudor Jones. I'm talking about on the dove side of the market. We ain't talking about the Hawks, right? They don't want the Hawks to speak, right? They would never have a Jeremy Grantham on CNBC.
Absolutely not.
They would never bring Jeremy Grantham on CNBC.
He tell the truth too much.
He will run everything in there out of town. Dwyer got to go. Tom Lee got to go. Leon Koopman, all them jokers, they got to go. Right? Gene Monster, all that the typical clown circus over there. And again, no disrespect, but I got to call it like it is because a lot of that stuff is getting misleading to the average mom and pop investor. Again, you still want to say, well, these people are more experience to kind of give you a good read on the markets. But again, they're speaking from a place they're having clients. They got to stay risk on even when there's risk off energy. But for us, it's about being able to assess market value by trend. That's the whole point of understanding why trend assessing is important in your daily bread of learning how to become a profitable investor and trader, because you got to know when it's risk on and when it's risk off, right? Or when it's time just to be neutral. So just like you were asking that question earlier over Rich, Brother Rich Boy, in this case, not Rich BK, right? Brother Luther, when you ask me, I was saying, well, here's a good way you can also assess trend, because what is the number one killer for tech in terms of an antithetical, right? Inflation. I see y'all connect them dots. If an inflation is a good read on what the value of what tech, right? What is the number one indicator to give you a good read on inflation?
10-year yield.
Say it again, Oba.
10-year yield.
That 10-year yield, which the ticker symbol is what? TNX.
TNX.
We own it right now. So here's how you can know a lot of this stuff is just what? It's just what? Algos. It's just what? Risk on, risk off cycles of them trading the peak to trough value, right? Because y'all know I live by being a peak to trough trader. We hit peak value on the 10-year at 316 on the 9th of May. Nothing materially changed, fundamentally changed. None of that stuff abated far as the value of what we know true value of inflation. We had a softer reading on inflation. It was just barely about minuscule points, right? 0.3%. Seriously? And we all of a sudden, inflation isn't all clear. We peaked inflation. Y'all remember the headlines were coming out? I said, look at these Looney Tunes. Boy, we a Looney Tune land if I ever seen something. These people like wild beast savages, like rabid dogs, to see if they can call the bottom or call the top of inflation. And yet average everyday Americans are getting kicked in the teeth with these high prices. No sympathy, no remorse, no. Look, these people, y'all know what it is. I get on my soapbox sometimes. I go there. Y'all got to forgive me. But I just see it. Y'all, when you know what the BS is, you just cut through it, right? You know what's going on here. But all this world was just a what? We had peaked in what? In terms of the 10-year what?
10-year yield.
In terms of that what? The trend value. Didn't necessarily mean inflation was coming down. We had just had a soft read in that value where we had a 0.3 pullback, right? In terms of inflation, because we know it was going to have that ebb and flow, which inflation does. Once the genie is out the bottom, it's going to have ebb and flows too, the same way oil did. It pulled back off what? 130, came down, tested 100, and now it's what? Right back up to 117.
Establishing a support, that's all.
So think about it.
So is it where if the bonds go down, the yields go up?
Exactly what it is. And that means if they're dumping bonds, that means if people are selling bonds, that means the 10-year or yields are going rising. Only when they're buying bonds is when they suppress it and bring it down. That's what the Feds were doing literally for what? For the past 2 years.
Yeah, they supposed to be doing bonds, QT.
They were buying junk bonds, muni bonds, you name it. They bought any bond they can get their hand on. They were doing reverse repo operation, reverse and then reverse repo operation. There's two different ones. They were doing everything they could to do to tell banks to hold on to their bonds or to buy bonds from the banks, to give them cash in inverse so they could turn around and go buy equities. By doing that, they artificially suppressed the bond yields, kept interest rates low. We was in a quarter basis point when they cut down the future fund rate to quarter basis point. And now that make the dollar also have a value of weakness too, right? Because it can only be as strong as it's backed by its debt structure. So we kept the dollar down there 8, 9, 90, 91 for the longest, right? 88 almost. And then soon that people start dumping bonds, a lot of people actually in this case were international holders, like Chinese used to be the biggest bond holder of our debt. And we saw data going back on the end of 2020 that they start dumping some of our bonds, right? They had to start circling their own wagon because of quarantine. They started building up their backyard like they're supposed to. They started dumping our bonds. That was the first ominous sign that this ain't good, because China has always been big buyers of our debt. And Japan as well, right? Japan make they living off buying our bond because their economy is literally it's a paper
tied
economy.
to it. Yeah,
that's the whole point of Japanification was they got they devastated their whole entire economy by being overly leveraged in subprime lending, property. They manufactured, they went under, and they ain't been recovered. They ain't been able to recover since. So for us, it's like, okay, I see what's going on here. I get it. So if you really want to track the value or the antithetical value of what growth looks like in America, 10-year yield. As soon as we hit this repeat right here at the top of the integration band, is 316. It was obviously, clear nice little blow off top, but there we got a nice little run. We stayed almost at the peak trend value of aversion from the mean at this line here for the longest, right? It was just bullets drifting up, right? Which was tech was coming down. And soon we get a breather here on the 10-year yield. What start going up? Tech. Not rocket science. Instantly you go straight to the QQQs, XLK, right? Things of that nature, even in some parts of the SPY, of course, like App or some of them like that. That was your inverse trade. Not just because it was just a fundamental read that these stocks were back to what they China was actually in the middle of a thick of their lockdown, which was hurting who the most? Apple the most, because of Foxconn, right? That production plant over there. Same thing with
Did they
Tesla.
open up? Did they open up China?
Barely.
Or they just
This past
talking?
weekend, they barely did. That's why the market drifted upward too. That's another, excuse that they're using to run the market up a little bit too. I mean, that's a good thing, because you don't want supply chain issues to stay clogged. I'm not saying that because that's also exacerbating inflation as well by the value in supply chain value, right? Because margin, people can charge what they want. But they just started this past weekend a little bit over Sun as well. And a little bit, they got some more data came out today in relation to the bad data we got on the other stuff we got. They use that as another couch to kind of bump the market up, right? But here's where it gets crazy. Again, just using the same value here. We're talking about trend, right? Look at here. As soon as we got up here and peaked right here, and you had that kind of ominous sign that, okay, yeah, we kind of at the peak point. Instantly, if you just say, well, what if I buy what? Since I'm at the peak here, that means what? My risk on factor here is what? Is 100%. That's 100% risk on right there if you're trying to buy that 10-year, always at 316 at that point. At the top, at the peak, right? Again, RSI was up there, even though we kind of stayed up on it right here too, but we definitely hit peak value there, right? Why? Because number one, you had a trend value that puts you literally, cresting up there. And then at that point, the data that you would look to in terms of 10-year yield, respective to its climb would be that of what? Inflation gauges, right? You got the what? Core PCE, right? Or in this case, PCE, right? Personal consumption expenditure. You got what? PPI. You got what? CPI, right? And then there's other ones, down the line, retail numbers like that, Michigan retail numbers, sentiment, stuff like that, duration, and some of the other stuff like that. But those are the real main culprits right there, the PCE, PPI, CPI, right? Falls in terms of inflationary readouts on this. And then beyond that, it's just going to be what? Good old-fashioned what? The commodity market, right? Because those are things that are mirroring what? The value of that 10-year yield value too, right? Those prime value contracts is based in that too. It's the admixture, but we know the main culprit. Nonetheless, at that point, you say to yourself, okay, all right, ain't nothing materially changed as far as the value fundamentals of the market for us around that same time frame in terms of utilizing or looking at the tech sectors, things of that nature as well, right? It started peaking, or it had this little bump up until that point, and then it kind of drew down a little bit, right around that same period, around May 9th, May 10th, it started to stabilize a little bit. See right here? It started chopping around a little bit here. We pinged up, chopping around, right? Chopping around, and then we broke, right? Somewhat of an inverse to that of what we saw on the 10-year yield. Just one of many different factors, of course, right? One way to look at it. There's many others as well, but none that you can't, assess in that same regard. SLK obviously going to look just like that, the QQQs, no surprise there, right? But all these are just those same type of signals that we're talking about here, right? These are those inverses, right? People start buying into the Apples a little bit. They start nibbling into the Nvidias, right? Those things became, okay, yeah, man, we got, we just can't sit here, whatever, right? In this case, some of them were still falling, depends on the assets, because some of them were just not correlated to that whole ideal of even the QQQs. They were just weak, overall weak, and they just got pummeled, right? But they tried to break what they could. But for the most part, you're going to look at exchange for exchange when it comes to that data point, or who carried most weight. In this case, would be Apple, Microsoft, things of that nature, Google, like that. These down the line players like this here, it's hit or miss, right? But if I'm gonna assess the value of the 10-year, the 10x, I'm gonna look at the TLT, and then I'm definitely going from there. Then I'm gonna go straight to the what? I'm going straight to the what? The QQQs or the tech sector, right? Those are gonna be the first main stops I take on that way if I'm looking at the 10-year yield value net, because I know they put a hurting on on high growth stocks that are overly leveraged in cheap money, right? Cheap borrowed money value. Especially in this case, they're still living off a lot of that COVID money, right? Because their production is messed up. Right. So that's just one way. That's just one way. So that's why we always tell people, keep your eye all times, right? All times on that 10-year yield, right? Always. And the fact that we're kind of climbing back, a little bit right here, that means that no matter what Wall Street is telling you right now, talking about this, it's all priced in and we're in the all clear, not buying it. until you get this 10-year back down towards what? To be honest, y'all look where we at in terms of support, right? We know we got a hard line around that 2.7, right? You got chatter here, you got obviously chatter here. Until that breaks and that becomes what? New resistance, right? We're not in the all clear because everybody want to go pile into what? Tech. They're not piling into home builders, right? They're not piling into what? The retail, XRT, brick and mortar, stuff like that, right? They're not piling into the XLY and the XLP. They're not piling into those things. Let's be honest. Their first
Yeah, I
choice.
was looking at deer today, and deer have no volume. And you go to Nvidia, all these other stuff, they got high volume. And you looking at deer, and they just going up on no volume.
No volume melt
I
up.
was like, whoa.
But you got to look at it too. It's you have a lot of short sellers in there, and they're like how O was talking about with the tech stocks. They're mostly looking at the tech versus like the other stuff.
Yeah, but this is a part of correlation too, because that's actually a part of what trend also relates to, right? What is correlation? Anybody? What is correlation? Just natural value. When we say it's correlated to something, that means it's what?
Similar or the same.
It's similar, right? It's tied to it. It's similar, right?
Mirroring.
I mean, it's symbiotic to a degree, right? Well, a lot of this bullish drift in terms of the broader market pumping, guess what? These stocks always want to attach themselves to what? To big dogs if they can and get it leg up, right? Hey, throw me an anchor too, right? Throw me a life preserver too, right? Come bail me out. And so a lot of this bullish correlation is what? Convergence, right? In relation to being able to trade in tandem to what? Broader market sentiment. Algos are now programming themselves to that when we have such oversold conditions in some cases, right? Or trough values where there's a potential good dip to buy. And they just get correlated with the broader market and ride with it too. Again, deer came down and tapped out at 310. Now you're sitting up here at 361. That's short of the time frame. This on the daily. 1, 2, 3, 4, 5, 6, 7, 8 days, right? Somewhere around there, 7, 8 days. You gain what? 50-point move on deer, right? You had an overspill on the linear regression band. You just want to use the band here. You had an overspill on that when we kind of crest below 331, flushed down to 310, worked hard to get back above it, got back above it, and then that became what? The support. Clear as day there. Look at that. Could make this stuff up. Clear as day here on the trend band here. And now everything from that point on is what? Risk on until what? Something changes. It's 200 on the daily, sitting at what? 367. Literally 6 points away. They can almost smell that 200 moving average on deer. Well, they're going to be fighting trying to get that. But it hit it just right up against the resistance on the 20 moving average here, right? Sitting up here at this 361.50 area. Right. So either way, any stock you look at, it's going to have its threshold, but it's always going to be trying to play into the correlated value of the broader market. If it's also, again, playing from a place of weakness, right? They need that ultimate sentiment drift value to also aid into keeping the short sellers at bay. Because all it was just short sellers just took a lot of profit. See, that's what another part is too. You guys realize that short sellers ate, even on John Deere, literally the end of April. This thing was sitting at 441, right? Near 445, right? They pushed John Deere from that point all the way down to 310, right? 310 in a matter of what? 30 days. One entire month, this stock dropped what? Almost 100 and what? Was that about 100 and what? 30, 40 points? You talking about a glorified short sale? Now, who y'all think was making money on that way down? Retail traders or
institutional?
Or institutions?
Institutional all day.
Man, they made a killing.
And you guys got to remember too, these institutional traders is coming on CNBC, Bloomberg, all this stuff, sounding more hawkish than ever. About this stock market. They're playing you. It ain't no way in the world.
And behind the scenes, they're doing what? Short,
right? Like ain't no way in the world somebody gonna
off the market.
Right. I still believe in Tesla. Oh, I still believe in
we're pretty bullish.
Yeah. We're still bullish on this. No, it don't make no sense because you're losing so much money in the insane process too.
And they got options on tomorrow. We hedge, or they do it the proverbial way that most people don't have no clue about. What they hit that what They hit that dark pool, lights on.
Mm-hmm.
Lights off, move sides. What that little song back in the hot boy days? How
Yeah.
song go?
Talk about Lil Wayne. Talk about Lil Wayne.
Lights off, mask on,
Lights
move
out,
silent.
yeah. Lights out. Yeah.
That's what they do. The dark pool.
Yeah.
Because retail don't get the chances. They don't see dark pool print, and it's legal. That's the whole issue with GameStop and AMC today. They learn that game. They learn that dark pool. They learn it now. They see how Citadel Ken been kind of going behind it and hitting they learned it, but that's how they can play the backside of the market and don't have to be adhering to their client base. They come through the dark pool, the back door.
Mm-hmm. I want to say, man, y'all better not listen to Kevin O'Leary. He playing y'all, man. He gonna make y'all look.
Clark is right twice a day. You know how that goes. He'll say something that always mirror good sense, and then the rest of it just be a whole lot of like you said, just a bad read on on people. See, sometimes, and he's the business of being a good read on people actually too, because he's a talent hawk, right? In terms of marketing value when it comes to VC investing, right? Shark thing, all this stuff, right?
Mm-hmm.
But again, when it comes to real money, when them cameras cut off, they tell you how they really feel, because now it's like, okay, the market stuff, because you're a big market mover, right? Market participant, I should say. And yeah, you really figure out what's going on, right? Because again, these same businesses that he's talking about or investing in or funding, right, to come in for capital round, seeds, whatever. And it's like, yeah, you're in a different time right now. You got to be able to pay people what they want, because the wages have to be equating to that of the inflation. If not, you're gonna have a society that's working twice as hard to receive twice as less, right? That which in turn to that, you're not gonna have a good economy, because their output gonna be twice as less too, right? It's gonna be less. They're gonna stop buying the stuff that needs, the economy needs, but the runoff of these companies, whatever, gonna be faltering. They're not gonna be able to buy their products, because they're gonna be closed and clamp wallets. So you can't have it both ways. So you got to either pay people a livable wage, or you got to have good controls at at the helm of your economy, your government, that can keep a balanced well-balanced checkbook in a way where everybody can benefit. If you go one-sided, one over the other, you start showing favoritism for one side over other. In this case, Wall Street over Main Street, you know already lost. But guess what? They made a habit out of doing that for so long, and really just dumping on American people, because they figure out that American people are just kind of they move at a snail pace in terms of what they would really get up in arms about in terms of change, until what just happened January the 6th last year, right? That the raid on Washington, right? Which changed everything, right? Well, we're in different times now. They can't play that game, that fiddle any longer. All this money gets going over to Ukraine that needs to be used here for infrastructure, for gas, for food. Y'all think people really gonna be forgiving about that come, November primary and October primary area?
Not at all.
Absolutely not. Nope.
It's good to say that in front of the TV and the camera, or your ecosystem, that you kind of support Ukraine, because you don't want to be looked at as
Mm-hmm.
Good
but
publicity.
I'm like, who in their right mind gonna take those bullets in the back of the head, in the chest, in the back, in the kidneys, just so they can look good for a soundbite op or a photo op to say that you support that scenario, and knowing the money that they send over there is money you need right now to keep your child having ample child care, food on the table, your bills paid. Like, y'all get it. So when you don't have to answer to that aspect of lunacy of society, and you know how to read the signals yourself, and you know how to make your own money under your own time and dime, again, your assessments are more balanced in life, right? You're not going to be easily swayed. So just like Oprah Chris was saying, when you hear people come on TV and they speak in a certain language that's not necessarily conducive of reality, you know how to read through the fluff.
Right.
If you're assessing trend for a long-term growth portfolio for your money, and you're trying to say, is it safe to go back into money market accounts now? Right? Is the money market, ecosystem right now for putting money back into that, as opposed to dealing with just equities alone? Well, that's also a portion or an assessment value of you figuring out what the ecosystem looks like on the macro fundamental side of things, right? Right? Interest rates are just getting started. Again, when people ask, well, why ain't the financial just really breaking out if they raise the interest rate? Because the interest rate hikes that they're doing are so low and little that ain't even the move the needle, right? onto them things till we get well above 2% at best. And that still ain't gonna be enough. Why? Because let's say even we get to the point of getting around about 2%, and let me say at that point, inflation is still sitting at, let's say, 6 or 7%. Like, where's the money in that? You still negative what? Negative about 4, a negative 4 delta, right? Somewhere around there, -3 delta, something like that. You still negative in that regard because you're getting ate up on the back end of it because inflationary costs are eating up all your incremental interest accruing gains. You know what I'm saying? So it's messy, but it's necessary. Y'all with me? It's necessary. So for us, no, go ahead.
My fault. I was gonna say, all right. So saying this and saying that, what do you think? As far as like the Fed, are they gonna do a soft landing or are they gonna do like a hard landing? I mean, like right now they miss the balance.
No, brother, come on, brother Brandon.
No, I'm just saying, like it's still room and opportunity.
That's a legitimate question. I know. I'm gonna say this.
Like you got to the 15th to do something.
We got some tentative dates, right? We got tentative date, right? Here's what interesting. That's a very legitimate question because y'all knows what I know. They've been on press tour lately, have they not? When we talked about earlier, when we have peak media, what is peak media? Peak media is what when they trot out all the chicken hawks. I'm gonna call it they really chicken hawks, right? They really a bunch of chicken hawks. They go on tour the same way your favorite rapper singer go on tour. They start. We just talked about they bring out all the heavyweights. You had every Fed and the janitor at the Federal Reserve speaking. Like, but who did joke here? This little Larry, the janitor came out. Yeah, I think interest rate for the game. But who is this?
Is that a janitor? Like who they got on TV?
Everybody. Peak media is there to what? To quiet the what?
The noise.
Right. In this case, it's to keep Wall Street what? Gainfully employed. When Wall Street is gainfully employed, or at least some semblance of that, right? What does that do for us? The credibility of the what? Of the Federal Reserve, right? It bails them out of what? Bad policy. Because they'll say, well, guess what? Least path of resistance says that, guess what? At least what little left value of our pensions, savings, 401ks, which is the semblance of what people really get up in arms about, ain't really what? Overly tanking, right? They might be bad, but they ain't really what? Overly tanking. We can say we can attribute that to the what? To the Federal Reserve, right? Right? Cheap money policies, right?
The inside man.
Because there's no other way you can factor that towards what? Bullish growth based upon what? Organic growth. That ain't the case because America been what? At the house over a whole year and change. During the quarantine, the pandemic shutdown. So there was no production. So we go back to the old school understanding of what is inflation, right?
While we had negative GDP.
Exactly, right? And then from regular inflation, then you have what? Either what? Hyperinflation
or stagflation.
Or you have stagflation. Which one is the worst out of all three?
I think it's stagflation.
Exactly, because think about the root, the prefix, right? The prefix word in the word stagflation is what?
Stagnant.
Exactly. That's when you have sedentary endemic what? Inflation. It's gonna take. They say what the hand of God. Like, we're gonna take the hand of God. But they're going to get in there, pull out them plumber pipes and unclog that what? That system.
Yeah, slow economic growth and low employment.
And what? Stagnant wages.
Right.
Like, how you gonna survive that? If your pay increase is not going to equate to that of the level of inflation that's hovering at a stagnant mean level. Now, it went from being volatile, now it's at a mean level. That means it's just sitting at around 7%. And your wage increases at what? They gave you a measly 3%. Like, bruh.
Ain't do nothing, man.
And you have no other means of income coming in, no supplemental values, a way to make other money. The government ain't doing nothing. They throw you a bone, right? They throw out their bones to what? The Wall Street. How you gonna
eat? They gonna lay you off. What Zero Hedge put out right here? We could see 1 million layoffs or more.
Well, see, this is the purpose state because we already talked about it. Y'all already know this stuff. But all y'all know this stuff. even that soundbite we got when we did the whole case study with Jeremy Grant, when he said this is how the system works, right? Everybody takes their term again, taking out back, getting a bullet put in their head, right? And then from there you start having the value, realizing that the end result of that, of course, is going to hurt, adversely affect the main street side of the house, right? Because if these companies stop being able to live half the hog off of cheap money by the feds, and they can't have the margin value that they had before, if they don't have margin pricing power that you would think some of these companies should have, like a grocery store would, because they can't, then they gonna start doing laying people off.
Laying people off.
They're not gonna trade in their yachts, they pension bonuses and all this stuff for the greater good of not betting against America.
Right.
Sherry, what her name is? Cheryl, what was the lady, the CEO of Facebook?
Sandberg or something like that.
Yeah, Sandberg, right?
Yeah.
Y'all know the bird, the Sandberg. Sheryl Sandberg just walked away over 15 plus years with at Facebook. She couldn't take it anymore.
Oh yeah, Facebook, yeah.
She walked away.
They just picked somebody up though this morning. I mean, last night. There was a Mexican dude. I forgot his name. Something like Ortiz or Ortega, something like that.
What happened to him? What happened?
They just picked him up to replace
yes, Sarah. But everybody knew she was she was the key, right? Meaning she know all the dirt, basically. She know all the dirt. This go back from Cambridge Analytica. Y'all know all the scam. She know all that. Yeah. So the fact that she stayed around through all that, and whether all that bad press, bad storm, bad all this, that, knowing that the company was doing shady, corrupt, inhumane things, and then preaching another, she was the glue that held Facebook together long enough for Facebook to make the epic run up there where it went, or whatever. The fact that she walking away at the bottom and not the top says everything.
I think it says she dumped her stock too.
She walked away at the bottom. Most people walk away at the what?
At the top. Yeah.
Like the feds did, right? All them Fed insider trader, right? Claretta, Carita, all them that were them niggas sold at the top. And didn't even went to prison. Didn't nobody go to prison.
Walked out on market highs, boy.
Nobody went to prison. How is that even possible, guys?
It was that bad. She dumped it at the bottom.
She dumped at the bottom. Started from the top, now we're here. Right? That's how we knew we did the inverse. Started from the top, now we're here.
She said, damn, man, I'm dumping it now.
Right.
I got to get up out of here real quick.
She dumped everything at the bottom. That you got to be like, bruh, when it's that bad, like you know what it is, right? That's like, bruh. So those are ominous signals, right? We already heard, Zuck had already came back and said, what? We already envisioned at this point, since everything went haywire and went left on a quick, we already sensing that we're gonna lose well over what? We said was it like 3 trillion on the metaverse over the next 3-5 years, somewhere around there, hypothetical value or pre-val value on that. It was somewhere around there.
Not no more. Yeah. They said they caught women getting raped in the metaverse.
Man, it's all kind of mess over there, right? And that's even another, scenario in itself beyond just the nuts and bolts of the business of Facebook, right? Because for so long, how did Facebook make a lot of their money? They made a lot of their money through what? It's a very simple process. What is it?
Selling people identity, basically.
With that too, but also, on the books at least, right?
Ad revenue.
Ad revenue,
yeah.
Exactly.
Mm-hmm.
They've been signaling that the ad revenue is going down, ad spend is going down because companies are being tight with that. Snapchat just came out and said the same thing. That's what eating their stock, right?
Yeah.
So this company another company, this small company, I like that company called AppLove and Digital Turbine. I hit them up recently, Ernie. They're one of the engines that drive a lot of that stuff, right? The synergies behind the ad revenue collection from Google, Apple. And of course, it was even easier to say that if they were hurting in terms of Snapchat giving back, Facebook already came out and said that they're going to be struggling. The Metaverse project is well understated or overly stated in terms of what the time it would need to get to what full scale. They overcompensated, overspent, and now it's not a reality. And you're in the middle of inflation. And keep in mind, during that time, guys, people out there buying NFTs for what? $39,000, $200,000. Patches of land in the metaverse. Are y'all kidding me?
Yep.
They bought digital real estate that ain't worth what? The toilet paper. Look,
That's why you say it's this market is oversaturated, man. It's got to be burst because this is just too much fugazi, too much bull crap.
It's a tulip mania in multiple sectors. As before, when we had our tulip mania back in the day, because when housing scenario, we knew the tulip mania was there with the subprime lending contract. It was just too good to be true. Before that, the .com bubble, all that stuff like that, right? It was just too many of them, too good to be true, right? We went through several statuses, right?
That stuff was crazy, man. I was watching that documentary about the 2000 .com bubble. Yeah. Bro, they was running up so many companies that weren't worth nothing. It's
off the rip. Same thing we dealing with today.
Same thing dealing with today.
In terms of the SPACs and all this other stuff. See, one thing about Wall Street, guys, it don't what? It don't change its stripes, right? It just, it's the same reality, guys. It's the same reality. They just morph from one to the next. And a lot of that you attribute to value of innovation. Granted, everybody want to be able to kind of make a better mousetrap. We get it. That's the whole modus operandi of what? As an innovator, right? There's nothing new under the sun. You're just trying to build a better mousetrap. All that basically is that you're trying to get a better provide a better use case, right? And save less, right? It's about cost control, right? Saving less to be able to provide more, right? Especially when it comes to the qualitative value of life for people, you will hope that be the case, right? EVs, this, that, and the third, right? But in some ways, it's gonna be a little hands getting dirty, right? It's gonna get a little messy out there. But ultimately, guys, y'all got to realize this stuff, and you got to take this stuff for what it is. When you're in this to make money, right? No more, no less. We're not playing this game of I'm gonna take the L or the bullet for what? The greater good of what? Everybody, right? Wall Street ain't never did that. Facebook ain't never did that. None of these companies have never done that. Even the ones who run around claiming that they're a big proponent of ESG. Turned out the ESG, they ain't got turned on his head a little bit. Elon went to exposing the ESG hustle. He said it ain't all what it said, cracked up to be. In the beginning, it meant well, but turned out just like anything when Wall Street get his hands saturated into a lot of stuff, and they start putting in they crook fund managers to kind of oversee certain aspects of that industry or that scenario, and come all the jerry rigging numbers, inflating stuff. They messed up the whole idea of what that could look like. Case in point, what happened with crypto when they started doing these CME and SIBO features for crypto? Same thing. If it went from being a decentralized value where they saying we trying to keep the likes of those people out because we know they have a habit or propensity of messing up the whole reality in this kind of stuff, why would we always turn around and give them a free leg up in it?
Makes no sense.
Makes no sense. You just you gave away all your power when you put, So now that correlation, now it's a gift and a curse in its own way, but now you have the same thing we talked about earlier. You have correlation of Bitcoin, or the idea of Bitcoin, at least in the crypto space, to to tech now. Or in this case, the NASDAQ, right? The NDX or the QQQs. So if the tech set is crashing because MicroStrategy, Riot Blockchain, OSTK, right? All the ones y'all know about, right? That's publicly traded. Now these companies ain't no major movers in terms of stock market, right? Let's be honest. But all of a sudden now they got a lot of theoretical weight for the value that now people are starting to look at these crypto stocks and buying the equity holdings of them as opposed to buying the actual crypto without having to own that because they still scared of the risk. So they're saying this is a software to get people invested into the crypto space, right? These fund managers saying you can buy MicroStrategy, you can buy this, whatever. So the correlation value when the algo is starting to read that, they say, okay, well, guess what? If tech set is hurting or Bitcoin got to crashing, there goes the tech sector too, to a degree. And obviously aspects of the SP 500. So you took away it's anonymity. You took it away it's special to zeal or power by correlating it to the equity markets. Because they kept telling us it's a hedge against equities.
Yep.
It's the ultimate hedge against equity. It's better than gold. It's digital gold, right? The gold hawks out there like, bro, y'all can get that mess up out there right now. Boy, y'all know they're going in on it now. Robert Kiyosaki, he like it. But, again, he conflict because he like Bitcoin, he ain't like gold. But he got to swallow a little crow with that because it's tanking because of equity market. So the only thing he can do is get mad and just blame it on the stock market. But people like, obviously Rick Rule, Jim, Jim Rickers, because he different on crypto. But the real hawks out there is Nova Grants. Oh, well, in this case, in terms of doves of Bitcoin, Nova Grants, people like that. Of course, Michael Saylor, whatever. There's many others too, right? They kind of caught in that same proverbial quagmire now because they're like, we stuck. We got to be adherent to the equity markets now, right? But before that, Bitcoin going to 100,000. No, look, it was no doubt in my mind it could have easily went up there once we got up in that 60,000. But right during that time, if y'all remember, in came to what? Them futures contracts and all that stuff started what? Came
Yep. Got him.
That was your what? That was your moment. You done. Huh? And now all the bad news of the market, the contraction of the backer that was riding on what? Free cheese and cheap beer, that party was ending. And at that time, Bitcoin was what? Just waking up. And now all of a sudden you got to what? Get in that same pecan truck with all the equity trash, and now you're in trouble. Get your $100,000 run.
Facts.
Couldn't make this stuff up. So it's a value of being able to assess the trend in relation to what? Correlation, along with the value of the duration value, meaning what's the time structure you have in play, and how to move within these different spaces and whether or not these are good investments in the here and the now. Because a lot of us was all excited about certain things like Doge. We were excited about Doge, even though we know it's a novelty coin, the used coin's value was what it was, but it still had its anonymity to that of what? Equities. Shiba Inu, all these different, look what happened with Luna Terra. Luna Terra went over like $100. It went all the way down to what? 10,000th of a penny. It went from 100 down to 10,000 of a penny and it seemingly what? Short order time frame. But couldn't make this stuff up. Y'all know who played with that was too. That was what? Galaxy Digital, little plug too, wasn't it? Nova Grass them? Boy.
Yeah.
Boy, look, woo, 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 woo. Is it woo, 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 woo? Woo, 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 Gina. Right? we can look at it on any one of these correlations is gonna look hot. Maybe we'll look at it on Obi. Right? No, that ain't the one. That ain't the one you want, right? Because that's the pair. I need to look at the individual one. Let me find.
Do you do the dollar or do you do a different pair?
Because they have it set up now where before it was stationed. How you do it on here? Let me see if it's on because it was attached to this whole tether thing, but it's not rated properly in terms of how it's set up. Let me find the one. That ain't the one. You know what I'm looking for. I know y'all know what I'm looking for. I be honest, I haven't looked it up on TradingView. So I know they disconnected from the goodness, man. They disconnected it from what? This the one. Yep, I know because I know they had it set up on Bittrex too. Look at here, guys. Y'all gotta see this here.
Yeah, I haven't been on Bittrex in so long.
Right? You know what I'm saying? Classic, right? Look right here. Y'all see it right here. This thing was sitting at 118 just April. It's down now at what? 0002.
Yeah, that's tough.
Nova Grads, all them jokers was in this. A lot of people in there. What's his name? Pump, whatever name. Y'all know always big Bitcoin bull. All them jokers, they were just chilling by the Michael Saylor, chilling. Now you have this kind of level. Y'all see this here? You talking about fall from grace? If there's a such thing, bruh. There's some joker went out the top floor on this. I ain't making this up. There people went out the top floor. This they were talking about it, right? Matter of fact, that one CEO, him, and many others, they lost tons. That one guy, he had money into it. He lost over what, like $57 billion? He lost $57 billion literally overnight.
Was that the guy who owned
that Asian guy? Y'all know what I'm talking about,
right? Asian dude, yeah.
57 billion. Even Buddy on Binance, he lost a lot of money too. He lost billions. A lot of these jokers been taking L's lately.
That's crazy, man. I want to sell. I don't understand why they don't just sell. You think that's gonna go up forever? That's crazy.
This thing went from literally like that, like we know, it went from 0.000 to 5 cents, 7 cents, all that stuff like that, all the way to $116 and under. Well, I didn't say under, but about a year. I mean, you don't get those kind of astronomical. And
$116. That was the high.
Yeah, when it hit like, well, it was like 118.
I thought it was 132.
It might have been. Let me see. What was the blow off top? The blow off was somewhere around. And this just big because y'all know different chains have different values when it comes to crypto. So they have a different pair value how they do they turnout. So this one like 119. So basically 119, basically on 120. I mean, but that happened in short order time frame, guys. Anything they go from like 000 or 00 something, they go to 119 in about a year and a month or so. Like, are you kidding me?
Yeah, you got to tell, you got to dump, man.
All these right here were they were millionaires out the gate. They became millionaires out the gate. A lot of them, if they,
they was greedy, thinking it was gonna get higher.
And then guess what? Right here, when y'all see that commercial, y'all might have seen that commercial. That guy said, "I'm a millionaire." The next day, oh, I'm not a millionaire, right? Yeah, look, what the commercial I said, "I'm a millionaire." I'm not a millionaire. I'm a millionaire. I'm not a millionaire. That's exactly what they were, because they could have eased it right here, and they didn't. A lot of them hell. They took the eight mentality, right? See how that stuff became an infectious disease? This 8 mentality. Hold it, bro. Don't sell, bro. Sticking to the man, bro. And all the gains evaporated all the way down. This is what you call not reading the trend, not following the trend, bucking the trend against your
double top.
I mean, you clearly see a head and shoulders pattern right there towards the end. I mean,
yeah, clear as day. Clear as day, man.
And that's for the bad news hit in terms of what happened, that caused the deluge as well. This stuff is so but this is why, realizing the value of trend, even if you still learning fundamental value, is very vital. If you are in the business of making money as a trader, it's in your best interest to realize the importance of it. And you'll pick up bits and pieces of fundamental as you go, because when people panic, there's always some kind of paper trail potentially, if there is one, because people are going to post about it, because they're trying to find an excuse, right? People going to find a way. What caused it, right? You may be a little day late, dollar short in some cases, but sometimes you might be just, you can save you a little bit of money, right? What less you may have, but you got to be comfortable being able to kind of parlay between those two values in that, right?
Does that come from everybody selling at the same time?
That too, stop losses raid, the whole nine. This is what you call a parabolic dump, right? These are the worst scenarios, right? They worse than the parabolic upswings, obviously, because it's a chain reaction like never before, right? This would be considered like the 1999 crash that we had in the stock market. This would be like the 87, 2000. Yeah. This would be equivalent to some of those kind of scenarios.
Yeah, straight down.
Straight down.
Crash too, or no?
Think about that. To get these kind of moves, this thing was sitting at 100, guys, and it went straight down to like a 0002 in short order time frame.
I'm surprised they didn't jump out the window.
Some people did. I was saying that. I was trying to say, not missing. I want the algos to come get me on YouTube, but there was the story was out there. The stories were there. I've been on the little foreign chat room like, so and so he jumped off this, and he did that, and some people did this to themselves. It was that kind of stuff. They was hearing about it, and I'm like, see,
they were asking for people to get together and just buy to help get them out of that gutter.
That stuff would come. They would know, like, a lot of stuff would happen. People still just say like, man, GoFundMe's, and they were like GoFundMe's and crazy stuff, man. I'm like, bro.
They got a Asian dude that just created the Terra Point 2.
Yeah, I seen that little 2.0 stuff. He's just trying to capitalize off of back end. You know how this stuff goes. It's always gonna be an opportunistic person out there, right? Opportunist out there. And I'm like,
if you don't sell on the first one, you definitely have to sell on the second one. It's just like, radar charts, not discipline, no risk management.
Just a lot of money got drawn out over that.
That's crazy.
Hundreds to 000.
And have you as a teacher, but that's the problem right there.
Man, look, I'm trying, man, but we can save a couple pennies, boy, I'm happy, boy. But it's tough. But I'm just saying, because a lot of people ain't never went through the stuff. Of course, I'm not gonna sit and tell you I was, gainful trading the market in 2008. I was not, right? I'm like anybody else. I had market, understanding on at a base case, but we talking about trading markets.
Mm-hmm.
not my forte. I was out there ripping and running like everybody's on the corporate side of things, trying to find life in a way on that side of the world. And I was like, you realize this stuff when people who say they've lived through these different kind of hard drawdowns, like subprime lending crash, 87, these different things like that, 2000s, whatever. You know, of course, you gain a lot from experience. But if you are what they call, if you are a, what's the right phrase, right? If you're a true, you know, student of, I should call it what base case. If you're a true student of the industry or the game, when we do our history lessons, which we do, because y'all know we cover every aspect of this, right? We have language arts, we have math, we have science. Think about that. We are an unorthodox group of people, right? Now, I don't necessarily mean we're the top-notch people out. We're not. But I always look at these things like this. If you're giving people raw data and saying, well, hey, just follow this block value of information, this is only, and so you need to worry about, there are people out there to do that. No harm, no foul, no swipe against how they trading styles, their teaching styles. I don't take that approach because I think like for a lot of us, especially on our side, we're coming from what, a zero knowledge value to this. Now we have, again, soft skills that come along from our professional training, college, collegiate, professional, whatever. But when you tie that stuff into the marketplace, you need that crash course on a lot of what? That back end, the back end of the house, right? Those history lessons, when we put on those documentaries, things of that nature, over Chris been dropping a lot of them lately too. These things are great to give you what? Historical content, because they always tell you to look to the left to determine the what? The future, right? Especially on the chart world, because we're going what? Backwards in order to set up the value of what? Set up what the future may look like. Right? Make sense?
Right.
All this stuff is just there to give you a better what? Read on the what? The marketplace, so you can make better what? A better trend assessment. It ties exactly what we're talking about today. What are we talking about today? The trend trader and assessing the duration of a long-term trade or an investment.
Right.
A lot of people ain't been through that stuff, so they don't know how to what? Trade it. They don't know how to deal with it, right? They don't know how to assess the value of the what? The future, or in this case, the level of what? You know, the problems that are probably coming to hit them, right? They just like, no, buy it up, t-shirts and foolishness, right? Again, no swipe, but you got to swipe the AMCs, right? The GME types, right? Mm-hmm. So, because everything that's bad against their stock is not the company fault, it's the what? The market fault. Like, no, the company's trash, bro. They got a lot of debt on the books. They debt equity is like garbage, bro. They ain't got no real true path to profitability beyond that of, you know, being subjected to whether or not the market's going to what? Do this or do that or do this. So you're playing a game from what? You know, they playing the game from an echo chamber energy as opposed to that of a what? A balanced what? Perspective. If you don't have balance, you will never have what? Good equilibrium, right? You would never have not just equilibrium, being able to trade the markets and be a good reader on the markets. You'll never have consistency, right? Because everything that we're trying to do, guys, is trying to build consistency, right? Would y'all agree with that? Like yes. who on here is not trying to have a consistency in reality to learning this from a place where you can what? Not only, you know, deal with these kind of what marketplace moments like we're dealing with right now, but also be able to what? Think about what the next 2 years may look like, 3 years look like, 4 or 5 years may look like, duration value, right?
Right.
It's the same way a person put on leaps, right? At a time when they say, okay, well, you know, I'll play the risk, you know, from this position, you know, forward, that I may have a better what? Risk on opportunity at around certain levels. And I'll let the stock prove itself to me as opposed to me buying a stock right here and get what? Crushed if it what? Reverses against me, right? On the option side, you have different what? Strategies and opportunities that you can work with is my point. Better ways to protect your income, right? If you're trading, you know, the inverses, right? In 3-time triple leverage inverse correlated or inverted type of what? ETFs, right? To hedge against the marketplace until it what? Gets this stuff together, right? As one would say, right? That's the clean version, right? Get your stuff together, right? That's another form of what? Being what? Fiduciary responsible with your situation. My path to consistency is like everybody else that's on this session tonight. I'm working at it every day. I want to be. Go ahead, I'm sorry.
Can I ask you something?
No, go ahead.
On when I be seeing when you be trading the SPY. Are you trading the SPY with 0 days because I don't step back from trading. I just realize I realize that I'm always buying. I'm never buying close to the bottom. I'm always buying in the middle. And since I've been back into it, and I notice, I say, man, I'm doing something wrong, and I see in hindsight what's going on. But I just wondering, are you doing 0 days? Because I'm seeing that you buying like 67-cent, 18-cent contracts, and I'm like, well, where are these at? And then I came across some 0 days to expiration. Is that what you're doing?
2 day, 3 day, it depends on the volatility. And I do that for a lot of times. I do that stuff for the use case, right? Y'all know I had this little, I don't know, it's a little mission I like to have what I provided for the family, meaning us, where I show how to do what. Y'all know about what? Little piece of change for a little strange campaign. I'm still on that campaign when I present it to you all, right? Because a lot of people who come to us, they may not have that level of what? Risk capital, right? Like some of you guys, right? So they're making positions based upon what they feel like is what is operable for them to work with. So if I put on, let's say a case study trade, I share it with the group, right? If this contract costs me like $1, 60 cents, $2, whatever, those are notional values that most people can, feel like they're working with on average, right? Then everything that comes from that is exactly what we're talking about today, over being able to assess what trend, right? What is the option contract? It's time and what? It's time and what? Directional trend, right? That's essentially what an option contract is. You test it before you try it before you buy it, right? And the SPY, of course, is the one that gives you what? Shorter trend value than it is what? For the typical weeklies you get in most options, right? Outside that, then you have what? Monthly operational what? Optional trades, right?
Mm-hmm.
So I'm trading under that same auspice. Now, but be a person buys 1, buy 2, 3, 4, 5, like I do sometimes I buy 3 or 4, sometimes I buy 1 just to show. These are all based upon exactly what we're trying to provide to you guys here today and understanding how to be comfortable in reading trend. Because you can't take the approach that, if you don't know how to sell instrument trade or asset trades on average in turn, let's say just volume value alone, right? We're talking about liquidity here, right? Low volume melt-up moments only benefit stocks that are what? Correlated even more so to that of what? To like, SPY, QQQs, whatever, and it depends on where they've come from previously, right? Because you got to assess where they come from. And that's to determine whether or not they have what? A good ATR on average, a good value of traders who trade them, collection of traders who trade them on average, or is it just algos, right? If it's just, algos running them up in a certain, instrument, then so be it, right? There's a lot of different factors within that. So my point is just that I'm coming in, I'm looking at the marketplace. I'm saying, where are we, right? Now, granted, we'll use this start of this week just on GP, right? Of course, we had just a 4-day week, right? We opened up the week on the 30th, right? No, the 31st, excuse me, the 31st, right? We came right out of a bullish drift out of the previous day, Friday, right? So instantly coming out of Friday, if you say, well, okay, we had uptrend, a gap up base, an uptrend gap up run up into hard resistance into Friday, right? Friday's, basically expiration. Clearly, if you don't close above that, y'all know my thesis, right? If we don't close above a notable resistance point, that's going to be a value of what? Resistance, right? Or a particular pullback or some weakness there until something changes. It was no different coming into Monday. So soon we had to gap down Monday, which obviously we did, right? Now, whatever excuse they have to say what caused it, there's always an excuse, right? All right. That was just an extension of a technical overflow. We overran, our moment. We literally went from from 396 to 416, right? How many points is that? Right, like that's 20 points, right? That's a 20-point move in literally nearly 2 days. Now you say to yourself, coming into Monday, we only had we had a Monday, Tuesday, because it was a holiday Monday, right? We had an expiring contract on the SPY, because your SPY gives you those 1, 3, and 1, 3, and 5, right? Contract, right? You get 1 day, 3 days, or you get a full week, right?
Yeah.
The Tuesday contracts at that point were already going to be saturated, especially if people traded out of Friday into Monday, right? Especially how we close. And you had a risk off rack, or excuse me, you had 100% risk going on the last 2 days, right? Of just 20-point move, right? Which is crazy. You know, at some point you're gonna have a little stagnant value of a pullback or something, right? To assess the value of how well the market is really, really eyeing the fact that either this bullish trend can continue or it's going to abate and we're gonna pull back, right? Because it's obviously inorganic, right? It's just running off the lows. It's like Wall Street always overdoes everything. So you say to yourself, well, if I buy a 0 days expiration contract, I'm planning for a strictly a scalp trade or day trade. Obvious, right? It's 0 days, right? It's obvious, right? You know it's gonna be a day trade or a scalp. You're just playing for any kind of hard directional trend bias in this case, and you out of there. If you say, okay, well, even if that's, if I still let the market to the upside because, we had such a massive move to the upside, we went up 20 points, then, and if you're trending at or around resistance, is it a good idea at that point, again, given how the market was trending at this point, just, let's say the whole day of Tuesday, we just basically we pull back, we got our bullish, or I call it our bullish pullback, right? We came down and tested literally what we hit a low, but it was like 410, 410. So we dumped basically like 5 points. And majority of that stuff would happen during pre-market. So you know how market is. They don't give you a whole lot to work with, right? They stingy, right? So you had to close out the contract, quick as possible if you bought puts, which I was like, okay, I had a swing put. As soon as we came down the bottom, and I saw that it was going to hit a hard stop on this market. They weren't going to let this thing really fall, no more than basic 410. I'm out. Right now, I could have easily bought the swing calls and tested that thesis where we can go back to the trend. I knew we were going to go back and test it at some point because the market have a habit of trying to back test itself after making a bullish move. I posted today, matter of fact, in the group about how to determine particular of a bullish drift or uptrend. I don't know if you saw that in the group, right? I put in the Discord, right? Let me see. I'll come over here. See, right, this one right here. Right, I don't know if y'all can see it. I was writing on here. All right, can y'all see that there? All right, so we talking about trend resistance. Just hypothetically, we had an options expiration that happened. Yesterday, Wednesday, right? We flushed out all those guys, right? Coming from that, what do you get? You got just that. You got the flush, right? It flushed out all those guys who were sitting in their calls, who were still yet to take their profit. Wall Street shook them out of them calls, which they have a good habit of doing that, right? Facebook dropped that news that Cheryl was leaving all this stuff. People gonna find excuses why the market pulled back, whatever, right? It was a natural pullback because you had resistance, you had tested it several times and couldn't you didn't break above it, right? Don't necessarily mean that it can't. It's just that right now it was time for the market to pull back, take a little profit. It did that. Coming into today, right, where we was testing at around, we had hit a low of 407, so that became the new support until something changes. Everything from that point on is worst case support, and then we had the closing price, which was 4,950. That was pseudo support, because that's where we closed at, right? So we open up there in the same lightness and thinking that's going to be a major line to contend with. Intraday, just say for instance for today, I didn't touch any of this intraday bullish drift early on until we came down and tested that support. Hence, I started posting in the group. I said, hey, guys, here we go, right? We at a point where if we can crest above, I think at that point it was showing 410, 415 was one of those numbers. I got to go pull it up. But nonetheless, I had spotted the double bottom is my point, right? So that gives me, a scenario where, okay, if we're going to go back and test the high, now any contracts that you buy back towards the trend at that point, or in this case, the 20-day moving average at that point, which was kind of trending at around 410, 411, 412 in and around that area, those will be areas of interest, right? So we're trained to buy when we cross over major moving average, right? We cross the VWAP at around 408, 409, somewhere around there. and then we crossed the 20 at around about what 411. Those became instantly how would you call it? Those became instant trend reversal signals to give you what conviction whether or not this stock was going to trend back, at least try to test resistance at some point. Under the guise that we've already tested support, right? We've already had our support test. Now we either going to test resistance going into Friday, right? Or we can get it done all in one day. Just so happened they got it done in all in one day. You see what I'm saying? So your contract, because there's no expiring contract on a Thursday, you would obviously buy for Friday. So that makes these contracts here even more that makes them a little bit more solid for trend reversal if you have one, or more downside if you have one, if you're able to catch the trend notably, in the right way, in the right status, right? In this case, are we bouncing or are we going to plummet? So being patient is sort of the key in this case, because you already know what you're dealing with. Top side, you're dealing with 416 clearly because we tested it before. Matter of fact, we had a quadruple top. I think it was more than that. We hit that 416 so many times. I was like, man, this thing is crazy, right? This right here is an obvious resistance. And if we don't close above that, this thing is going to tank, right? We hit it like 4 or 5 times, right? Just coming out of Friday bullish drill, right? We hit it like 1, 2, 3, 4, 5, 5, 6, 7 times. Right? How many times you get to crack that before you break out? Everything above that was also rated towards the 2-hour moving average here on the daily, right? Excuse me, on the 1 hour, and the trend line that I had at that gap, or in this case, if you want to call it that, down to that trend line point around about 40650, right? We came down to, again, double bottom around 407. But nonetheless, my duration was based upon what we had for the options contract. We came in with a short week. So we know contract was expiring on a Tuesday, which is odd because they typically start on a Monday. So that was a no-brainer. That was just a small swing put I bought to hedge against this big 20-point move we had to the upside. As soon as it pulled back and started hitting weakness, right? We started hitting weakness around that 407. We came down pretty hard, which was great. I closed them jokers out. I initially waited a little bit and paused and thought about, do I want to buy retracement calls? I was like, no, it just don't look right, right? I'm just not feeling it. And I didn't touch it. I started trading some other little name brand companies. I said, coming into Wednesday, I take that back. That was Wednesday, excuse me. I said, coming out of Wednesday, going into today, meaning today's scenario, right? If we back test the value of the low around that 407 area like that, because we're so close at 409, that'd be a good place to put some risk on, right? For Friday, right? Granted, because we got big data coming out Friday, we got non-farm payroll, right? Everybody waiting on the non-farm payroll now. We got private payroll today with ADP, but the big one is going to be tomorrow, right? That non-farm payroll, right? Which is obviously inevitably going to give us more of an understanding whether or not the Fed's value in terms of them, consistently saying that, the job market is strong, labor market is strong. Well, that builds the case that the market should be able to weather rate hikes, right? So that's bullish for the overall economy, not so much for the thesis of Wall Street, that it can't handle rate hikes, but in their mind, they're still saying we're still somewhat in the all clear for the little while, because we can price in 50 bips. We just can't do 75. If the Fed's not talking 75 bips, then, we could play some of these oversold bounces and whatever. Or anyway, they're going to front run the news, either way you look at it. So you're going to always think about that when you go to put on an option trade in terms of time, right? Depending upon what kind of economic calendar you're working with. Does that make sense a little bit? If you're coming into an economic calendar that has very demonstrative news that's really going to move the market, we're not talking about, just kind of these little fluff, little economic, readouts that we get. Some of it, all of it is important, but y'all know Wall Street has its favorites. Then you're going to trade that the same way any day trader would just buying the common shares, right? It's strictly a day trade or a scalp, right? And the only way you're going to buy out, meaning buy duration, if you're really comfortable knowing that you're in a good peak or a good trough with that direction of buys, you need a little bit more time for the trade to unfold, because you want intrinsic value, which is option trading. You want your delta to reflect, at least if you're not buying in the money, but at least by the value of your theta to work in your favor, for them to what? Shake out the weak hands or whatever people be saying to get your trend going the way you want it to go. Soon as, again, I saw that double bottom at 4,750 and we crossed back over 4. Now, I didn't even buy that 4,750. I bought when we got a little bit of a little bit of like 4,980-ish, somewhere around there over the yesterday's closing high. Right, and I bought another one over like 410, but those were just scalps. I strictly noted them as scalps. Right, I told myself I will only hold those contracts, at least one of them, until tomorrow. If we close above, like I told y'all, we close above what? That old resistance at 416.24, then guess what? That's a word to swing trade at that point. That's when it becomes a swing trade, right? Or at least the ideal of it now, because we're trading what? We're trading a good old-fashioned what? A good old-fashioned uptrend. Right? Where's that little chart on that? Where that one? Here's this one right here, right? We're trading a good old-fashioned uptrend. See, options is, it's complex in a lot of ways because you got to have a trend value, a trend bias, but it has to be correlated to where the money's at, right? So my technical analysis tells me, hey, Willis, you want to make sure you're comfortable knowing, certain levels have to be what? Confirmed if you're going to plan on what? Holding this longer than what you're what? What these signals are telling you to do in terms of what? The contract, right? Because there was no expiring contract today, of course. I had to buy for Friday expiration anyway. It just becomes a game of whether or not what? Am I going to day trade this day, day worth of bullish drift, or I'm going to what? Swing trade it. And if I buy more than one contract, then that gives me the ability to do that, just that, right? I can swing if we have what? Conviction resistance breaking, right? In this case, we broke that trend, that 416.24, we closed above it. Now, anything can still happen overnight, clearly. Right? We got to get through Asia, we got to get through Europe market, and we got the non-farm payroll numbers tomorrow, right? But for now, again, y'all know Wall Street is what? In greed mode. They're on risk on. They bounced this market from 380, guys. It's up here and down there at 420 right now. In how many days? Right? And how many days? Y'all know how these people work, right? Y'all know exactly how they work, right? We talking about May. Say again?
It's called the non-fund payroll.
Yeah. So tomorrow we got it's non-fund payroll tomorrow. Yeah. I'm about to say private, but we had private today. You come over here, of course, you hit the economic calendar here, investing.com. You go, of course, hit that economic tab or economic calendar tab. Tomorrow we got hourly wage right here. Yep. We got hourly wage. We got hourly earnings values, average earnings. We got government payroll, which is that kind of value in that something. Non-farm payroll, manufacturing payroll. And we got, of course, all the unemployment there like that. We also have market composite. We got that. So we got PMI tomorrow, and we got ISM, right? Non-manufacturing too. So some of those carry weight, right? And Brandon speaking again tomorrow, which is whatever. She spoke a little bit today, but she's speaking again tomorrow, right? As well, at 10:30, right? So that's gonna be interesting. And we got Baker Hughes oil rig numbers tomorrow. That's on the back end of the day, of course, before we dive in, and aluminum numbers, which is gonna be interesting. I want to hear that one, just for the sake of Alcoa and a few others. But that non-farm payroll is going to be very instrumental, right? Because that's a doozy. That's going to tie into relation to what we talked about, or a little bit today, in terms of how Wall Street used that, basically weak data point today to burn, to rip the market off. And they use other stuff too. It was just weird. But that's Wall Street. But these are good numbers for tomorrow, because at the point where we crossed over resistance, they have a higher perch point to sit at to test to test that value of the marketplace tomorrow, if they're going to make that break for what? 420, 430, right? Because coming into this week, everybody was excited about what? Going back to what? 420 or going back towards that 430. We spoke about it, right? We spoke about it that Thursday, right? 420, 430 on the radar, guys. If we drift a little bit higher, that's what everybody's going to be trying to what? Get out of the market coming the next week, right? Any value of that? Go ahead.
I was gonna say I definitely bought. I think I bought like 9 calls just because it was cheap, and I was thinking it was gonna hit to like about 430, but I had bought like 9 calls last week on spot for 430. and it was like $3 or something like that.
Right. And again, we talking about time and duration, which is good because yeah, it takes a lot, but it's not a whole lot. In terms of when we say when Wall Street, kind of get behind the market, y'all know how they have a habit of propensity to overstating or overshooting or overdoing everything they do, obviously, right? That jump again, that bump off of 380, right? Because I was scapping all in here off that bounce a little bit too, right? Now, technically, it would have been easy for me to try to buy a little long-term duration too, but I'm just not in the mindset to do that quite yet, me personally. Especially on assets like the SPY, like some other stocks possible, but not SPY, because I already have in my mind, the training wheels on the market in a way where I feel like, okay, these levels here matters to me, right? And I'm trading them just like you asked that question earlier, Brother Luther, about what makes me choose my time is based upon just that. Now, if I was to see of us, if we're bouncing off certain key pivot points, right, be it a resistance or support. If I come down and test the very bottom of a support point on a hard bounce like this here, whatever that next expiration date contract available for the SPY, I'm trading that in reference to that of what? The trend bounce as well. If I think we're going to have a bullish retest of a certain resistance, I got 2 days, a 2-day window of contract. Maybe this, say for instance, if this day happened on a Wednesday, instantly I'm having to buy what? I'm having to buy this either for a complete day trade scalp, 0 days, or I'm gonna buy it for Friday to give myself time after coming off of a hard low like this to see if we can get this market to cook a little bit to the upside. I want to give myself time for that trade to unfold. You see what I'm saying? It will be that kind of energy. So of course I would buy 2 days out, right? Now, typically I rarely buy, a Monday to Friday contract. I mean, like one for entire 5 days, unless I feel like we have a better balance of price action, good, decent fundamental value of, again, possibly it's, there's a little stay of reprieve on some of the data points, and I'll let that contract just go to work. But the way that the SPY been trading so, recently, I would not trust 5 days in the market with a SPY contract, right? You would need a minimum, in most cases, the way that the market been trading so erratic like this, man, you need at least a minimum about a month, right? In that case, and then you had to be at them hard pivots, right? We're talking about hard pivots, right? That would be like, 406 after we kind of gapped down here, ran all the way down to 386, ran all the way back down towards again and came back again, because that's a double, you basically tested it twice here, right? That's your confirmation, right? And that showed weakness, right? So then I would buy what? I would buy durational puts here as opposed to durational calls, right? Monthlies. And guess what? But you drop from 406 all the way down to 380. How many people are gonna hold that into the entire month and you to make them kind of gains in that little short period of time? You cashing out, right? The goal is to make money, not prove how long you can hold a trade, right? Up to the contract expiration. That's not, that's what makes options so unique, right? You're playing bias. You're playing the value that you want things to happen in short order time frame as possible, much as possible, to collect more of a premium, which helps your delta. Make sense? So again, it depends on a lot of those factors, but a lot of these things are very turnkey. They're not complicated. You just have to have your levels mapped out properly. Your risk is assessed by how you define where the money is stacked up at, right? That's not rocket science. I don't make the rules of that. I see buyers here at around certain areas or support point. I say, okay, if nothing else, that's a little bit of chatter, right? I look to the left. I see a couple of buyers here, so we got a little support there. Okay, I buy that little dip right there. I buy that little risk on value of a bump up right there, because we tested, a hard resistance. We came back and back tested a point of hard support. Everything in this channel here is risk on. From that point on, at least until they shake me out the trade. Again,
yeah, what I was trying to, what I noticed, because I've been trying.
You robot is breaking up over. Oh, it's breaking up bad. You in a bad area. Oh, it's breaking up.
Doing it, and I was, I've been. You hear me? You hear me now?
A little bit better now. Yeah, it's robot now. You must be in a bad area.
Yeah, I was in a bad area. No, I was wondering. I'm like the theta on some of these because I'm learning how to do these little weekly options. I'm like, the thing on these things like 80-some cent. I'm like, how they trading? And then I realized, I'm beginning to realize, I say, he must be buying this stock precision, like precision on point, and it's moving right when he buy because I noticed when it did yesterday, when it did some kind of way, it went all the way down. It shot up and then went all the way down to a level. I had it marked out, and it kind of like drifted right there for a minute. But when it reversed, them little contracts was like 8 cent, 10 cent, and man, when it shot back up to that 14 area, man, that thing was at 50 cent.
Yeah, you breaking up bad, but I think it's like a rap song there.
Yeah. Bought them things that cheap. They made.
Yeah, you breaking up bad over it. It's real bad too, bro. That's what I think. It's bad. They got you doing that. You got that chop the screw. Chop the screw right now. But I think you were saying just the value of how it changes, it flips so quick, right?
I'm sorry.
No, you good. You good.
I'm almost home.
You good. So, but no, but
bad,
you can.
Man.
You
I really want to talk to you about that because I'm trying to really understand it.
Yeah, it's breaking up bad, Rich. God, dog, breaking up. I can't hear it. It's breaking up bad. I
want to talk to you about that.
Yeah, just hit me back on again. We'll double back.
I'm gonna have to.
Yeah, because you breaking up bad. I ain't hear none of it.
I'm out of the kitchen. Yeah, I come back. Yeah.
Yeah, we'll talk about it in Discord. Ain't no big deal. But no, just I think I got an idea a little bit what you were saying. But just, case in point, see right here. See the 427s. Somebody bought the 427s this morning, or when we pivoted off 407, right? You see what happened? That contract costed 3 cents off that bounce around 407, 408. It costed 3 pennies, or in this case, $3, right? How much did it go up today? 100%. Imagine if you bought 100 of them, right? 100 of them cost you what? 100 of them cost you what? $300, right?
Yeah.
You got 100% on that $300. That's a quick little 600. And you bought 427, way out the money. Now, did you know it's going to go up as high as 416? Possibly not. But you played the what? The double bottom trend reversal based upon what? The rules of engagement when you deal with patterns and trends, right? Double bottoms, it's a bounce, right? Bullish drift came in. They had a mandate going into Friday because, like you said, like I was telling you earlier, these contracts here were going to expire to what? To Friday anyway. So you had that cushion between what? All day today going into tomorrow, right? That's the only anomaly that you have when it comes to dealing with what? Time or duration in contracts in terms of the SPY at least, and then regular assets too. But the SPY gives you that 1, 3, and 5, right? 1 day, 0 days expiration, 3 days, or you get 5, right? You can play off some of these hard pivots like that and scalp them. That's basically what this is. You're scalping that what? The value of that trend based upon those available options giving you certain windows. If you want to spend a little bit for less, of course, that's that's dirt cheap. You paid 3 cents and made what? A whole another $3, and you can't beat that, right? That's when it's all said and done, though, of course. But again, the idea of knowing what kind of drift you're going to get within that, there lies where the work come in and knowing, what kind of market you have, right? What kind of market are you trading today, right? In this case, again, was just an obvious double bottom, which put on a lot of risk for the algos, right? It put on a lot of risk for the algos. We had a gap fill. I sat there and watched it. I said, man, if they gap fill that 473, right? It's going to be a risk on algo trade that we probably ain't seen in a minute. Why? Because now they have their eyes, set back on what they had initially coming out of Friday, is that we were going towards what? Right? This whole 420, energy, right? Because directional bias was already set there coming out of Friday. How do we know that? How can we check directional bias of a contract coming out of 1 week into the next? I'm asking that question. Anybody want to? How do we check directional bias coming out of 1 week to the next in terms of what the sentiment is on directional bias? What is one way I should say? I'm asking it that way. Excuse me. What is one way you can check that? Anybody?
To check the directional bias?
Chart from the long, or like a weekly, like the weekly or something like that.
In other words, you would check the what? Option what?
Option
chain. Option chain, right? That's just one way, because we know these are what? These are what? Net debit. Most of these things are net debit. These are people that's putting their money where their mouth at, right? This ain't no spoofing the bid like Wall Street and dark pool putting on bids and taking them off, right? Spoofing the bid, right? This is what money that's been collected, right? That's why we use that option flow chart, right? So let's go test that thesis. What y'all think them 420s look like? Y'all see them, right? What them 420s look like? Now those were bought probably, at an admixture of what? Between what? From Tuesday up until today. So some people that liquidated already. Some people probably bought, and of course today they bought more. Look at 58,000 contracts came in today for 420 alone.
Yeah, that's tough.
Right?
Yeah.
At peak, it was up over 148%. Look at the open interest though. See, that's where it gets interesting. Look at the open interest there at the 420. I rest my case. That's the biggest open interest on this entire what? Flow chart.
Looking for that whole dollar mark.
Y'all see that there? 26,000 open interest in that 420. I can almost guarantee a lot of those were bought yesterday, especially when we hit 407. And probably some people bought some Tuesday when we pull back a little bit. Because, of course, if you cross over what? That resistance at what? That 415, 416 and change. Actually, it was 416.24 after we made that, we made that new high. Hence the ideal of what? When you're trying to establish the what? Build on the value of what they call an uptrend, you do that based upon what? How well we test a previous high, right? In this case, let's come down to it. Let's test when we test that previous high, right? Where my uptrend, where we at? Trinidad, nope, close below. Yep. Right here, right? Close above a previous what? Swing high equals continuation of trend, or in this case, what equals a what? Uptrend. Y'all see this diagram right here? This was the previous what? Swing high. We got up to what? 416.24 in that previous swing high. We pulled back, collected what? New traders, right? That 407.50, 407.3, we actually gap fill at 407.3. Soon as I saw that, I said, I need some confirmation. I could have easily bought that 407 and put on a big risk there, right? But we was at the bottom. But I try to trade responsible. I said, I need confirmation. I need to see us cross over the VWAP, right? I need to see that VWAP cross and potentially even over the 20, right? So I played it over 4970 something. And then I got another one we crossed over the 20, right? All that was just continuation that what? If we're going to bullish drift back towards that what? That previous what? Swing high into Friday, granted the fact that the market turned, right? They turned the base of the print on, right? They bucked the what? The economic news of the day, the private non-paper, they bucked all the economic news, and it became what? It became a risk on day, right? I'm not going to fight against the trend. They turned the market. They turned it. So my contracts were reflecting just that. And instantly at that point, it became a game of, again, like I was telling y'all then, well, how do you hold that trade? Do you hold that trade? Do you swing it, bro? Do you cash out? It's all of the above, right? Because now it becomes a game of what? I need to see what? Confirmation of what? The buyers, right? I need to see the game working, right? Everything from that point on was just, easy peasy at that point, because this candle right here, this green candle right here, this here right here, but this right here, boy, that candle right there is everything. Y'all see this candle right here? Go ahead.
My fault. So when you found confirmation through the VWAP, were you on the same hourly chart, or did you go down to a lower chart?
The same one, the hourly, because I trade off both the 15-minute and I trade off the well, that's one option. I definitely trade off the 15-minute daily, but also I'm looking at the hourly too. Right.
Gotcha.
So
okay.
Let me see here. Right on. Where we at? Where we at? Okay, yeah, here. Right. So right here on the 15-minute chart, the VWAP crossed that literally around about 4939. Yesterday's closing price was what? 409.59. Make sense? So now when you cross over, then you know the rule, right? You got to what? Close above it, right? At least 1 5-minute candle, right? If you're day trading scalping, of course, in this case, it'll be obviously clearly over the 9 moving average, you cross over something like that. Or in my case, if I'm trading options, you know, I'm using that 15-minute, right? Because, you know, most of these, you know, flow charts lag in between 5, 10 minutes, 15, depending on what people use, but most of them are real time if you got a good order book that you can check a flow chart. But I use the 15. So as soon as we open up this next candle, or I'm not even showing it. Let me show
Hey, can I just ask you a quick question real quick? Why you right there?
Yeah, if you're your breaker, because you were breaking up early, you might be in a good area.
Yeah.
Shoot quick, shoot fast.
That candle you talking about. Okay, say it's a 15 minutes, and I'm beginning to notice something. It'll shoot at whatever the area of resistance or wherever, it'll shoot past, and then it'll come back down making like a pulse or like a heartbeat when it's at a certain area. Is that a sign of price action you looking for when that certain 15-minute candle, even though it make a full candle, it don't actually do that. Sometimes it just it'll go up and then it'll come back down under the support. But then at the end, it'll probably close a book below the support area.
Right.
So you'll have, even though it broke it, you'll have to wait till another candle.
What have I've always said? You have to what? Close above it. That's the rule. That's not even a mindset, but that's the standard rule in any value of reading an indicator, right? Or what we're trained to read off what? Trade off the indicators, right? And time does matter, because you asked that question as well, over Brandon, you know, are you doing the hourly, are you doing the 15? What are you using? In this case, again, I'm actually day trading options, right? So we know this is more of a bigger time duration than a short-term scalper using the 9, right? Or some people scalping up the 7 moving average, right?
Right.
Real intricate traders, right? And options, I'm like, okay, 15 works really well on the SPY because the way that the SPY trades in terms of liquidity value, right? So instantly, and it kills a lot of the noise too, because, you know, when you're watching the SPY on a 1 minute, you can't trade the options on the 1 minute, right? Unless you're really good. You bought that life, right? The 5 minute is great, but you get better in my opinion, you get a better assessment when you use the 15 minute. That's just me, my opinion.
It's
right?
more clarity when you
clarity.
trade. Yeah.
If you see right here on my chart right here, this 15 minute, y'all see that there? Y'all see when it crosses over that the VWAP right here at 409.15? And you got all the way up to what? Yesterday's closing price. You hit resistance around that 409.70, right? The next candle, it opened up at what? It opened up at what? 409.76. Right? Or in this case, you know, it's the OHLC 17, but 78, we'll say 78, right? That's my confirmation, right? Because we closed above it, right? So that means my risk now, if I'm playing this risk, is what? Back to the what? This previous candle, in this case, right here, was around what? When we open up on this candle, we open up at around about what? 4.896. I can either play that, or I can play the lower around what? 4.850, right? That becomes my stop loss if I want to play that what? If this is a fool's gold, you know, pump, or is it not? Because I'm going back to the previous what? Support, which would be that what? The low of that previous candle. Does it make sense on the 15-minute chart? Because y'all know that's a lot of money in the spot at 15 minutes, right? That's a massive value of time duration that you get. So instant when that happened, and I'm using trend too, because we're trained to look at what? Trend. The way that the trade is what? Unfolded in a what?
Trend pattern.
Clear as day. Y'all see that there? That round at bottom, our saucepan bottom, fry pan bottom. It was no, in my opinion, again, I could have easily bought it at 4.8. I needed turn confirmation. I saw that crest above the VWAP. We open up above the VWAP. I'm putting risk on right there instantly, and I'm playing back down toward the stop loss of what the previous candle low, that 4.850.
And this is your who, what, when, where, and why.
Exactly. In this case, this on the back, and we already established the what and the why. We know what's going on because it's SPY. We know liquidity. We know they tried to use the, you know, whatever, right? This old economic news that was fugazi as a way to pump the market, but a lot of this was just the same thing. It's, you know, it's a lot of stocks that are oversold. They use the value of the VIX because I still had the UVXY up. You know, they were beating the VIX down. The 10-year was still kind of somewhat, you know, a slight, you know, neutrality trade for the day. It wasn't necessarily, it wasn't going crazy ham. And they just used to try to to rebalance and go pick those guys up who got caught overstating their value that bought at 415, 414 plus 416 the previous day. And when they pick those guys back up, right?
Okay, one more question, because this is good. This is good.
No,
yeah. Quick question. When you're how do you know that candle that you were just pointing at is algo the computer generated, or is retail investors coming in there?
Now you definitely know this,
pushing the price.
You come
how
back
do you know that?
You should know this. I'm just saying. Now you were right there.
I lost it, bro.
When Mr. Lord,
I lost it, bro.
And Sal and Kelly Rock, the ones at that time, they used to be they used to be honest with this. That's Brandon. You can speak this over, Chris. You were there at some point too. And when they used to say,
I lost it, man. I lost it.
It's all right. It's all right. But again, you here to make sure you build on what you got. And you have to do this stuff competitive and repetitive over and over. That's why I say paper trade, if nothing else. Don't use real money if you're unsure. But what I know. Anytime you get, I'm gonna say it this way. I'm gonna ask y'all this question here. Y'all tell me what y'all think about this. What is a retail candle in relation to that of an institutional candle? What do they look like?
Sure,
if y'all look at my screen right now, if any of y'all go on y'all charts right now and draw on this chart, matter of fact, I need y'all to do that right now if y'all mind. Somebody go on in a annotate tab and draw from at least from this bottom red candle here, everything to the right of that. Show me what institution candles may look like as opposed to that of a retail trader candle will look like. Anybody go.
Somebody else do it.
Show me and I need the individual candles too, because you know how to go. We talking about institutional candles.
Yeah, y'all help me, man. Y'all help me.
Now you already know this. They know y'all help me because you finna get this. You finna get this work.
Man, I need this work.
I'm trying to figure out why my little pen ain't working.
Check your annotate tab. You should be able to do it because it's definitely open for y'all can do it. Right on it. Check. You should be able to write on it. Over.
Come on, Rich boy. You said you need help.
Yeah, man. I need to see this,
bro. You come on now. You
know he noticed.
Come on, Rich.
Because who was it? Who was it? Stock guy. Y'all used to be in the chat forums like 4 a.m. doing this stuff.
Oh, well, y'all know him and Stock got to be worn out. It used to be worn. I remember them to be worn out the time.
Well, back and forth.
Yeah, but y'all know that because we talked about the same thing, right? Them same little spoof candles, right? Or they spoofing the bid, then you have a big run-on candle. They get ready to reverse a trade on, especially we're shorting a lot. Once we got from our deal of going to all the momentum trade, moment when we got with trading, we started bidding for short. It was like game on. So we had to be able to determine, when institutions come in and spoof a trade, when they get ready to reverse it after we ran it down hard. Instantly, when that happens, that's gonna be what. An algo, right? Because it's gonna be an algo gonna have a hard tranche or lot size to stop that that inevitable downturn, right? We're talking about big, how can I say it? We're talking about big instruments. We're not talking about a little penny stock. We're talking about a big instrument like the SPY, right? It's this one here is definitely controlled by a lot of big money. Why? Because look at the price. How many retail traders run around with $40,000 to buy
100 shares.
100 shares of SPY. Stop playing. Right? If they ain't using a CFD for contracts or they don't have, basically 10x leverage, right? This is options or institution money in itself, right? Because SPY is more of an institution to control trade based upon its correlated value within the SPY, right? All these different stocks that make up this ETF, right? Make sense? So it's a collection of that, the institutions and retail too, because it does matter too. But as well as I know, ain't no. I always know somebody gonna show me that retail candle, that institutional candle. What does an institutional candle look like? Anybody, right? Anywhere from that blue circle when I just purple circle when I for what does an institutional candle look like?
A long bar.
Right? Where is that? Which one you got? Where you at?
I can get it.
You can draw. All right?
Yeah, I got you.
But really, what is it really called technically? It's called what? What kind of candle do you call that? What is it called?
Engulfing candle.
Right? What type of engulfing candle? What?
Bullish.
Bullish engulfing. The word engulfing is everything. Right? Right? Y'all know as well as I know. that engulfing mean it what? Engulf literally the entire what?
Orange juice in here?
Say again?
You take one?
Oh, you talking. Engulfing mean it what engulfs maybe what 2 or 3 other candles in what one move. Make sense? Bearish engulfing or bullish engulfing. This one big old red candle when it drew down right here to that 4750, that flush down right there, that right there made a short seller or put by what? A ton of money in what? 10 to 15 minutes. He cleaned up. We talking about from 410, 411 and change all the way down to 407 in 15 minutes. And then right after that kind of level of what outflow that you would get in such a down trade like that, because same way I would ask that same question. Do y'all think that was retail trading that sold that many shares that fast, or was that some institutional or algos too?
Institutional algos too.
Clearly, retail ain't got that kind of what, you know, look, they ain't dumping them kind of shares, right? So it's the same thing. This candle right here, I think Obersonner drew it. This little candle right here, that's clearly institutional trade. Look at the size of that candle. Now, I mean, we talking about notional value. If we just want to play that game of notional value, look at it. It had a low, open at what? 409.76, right? The same candle I bought on, right? It had a low of what? 409.58. It had a high of what? 411.9, what? 910. That's a 2-point move in 15 minutes. $2 move, essentially, right? Again, those kind of moments like that, you say to yourself, man, you know, 2 points in 15 minutes, especially even if you're trading up with common shares, that's a bag. Your day is over with, right? Some people sit around waiting for what? 20 cents, 30 cents, 10 cents. You get a 2 delta value move in 15 minutes, you're done. The same thing would be for an option trader. If they stack the deck at that what? Buy point of the 409.70 area, because it kind of open up at that point, they load the boat on option contract for anything toward, because now you start playing towards what? Other levels. The next level going to be what? The 20 moving average, 410.59. That's a point up. 1 point. That's a delta around about 70, 80, you know, really quick little 70, 80 bucks if you just bought one contract, depending on, you know, whatever. If you bought in the money, at the money, or a little out the money, whatever, that delta still somewhere between 60 to 80, 80 value on that delta. That's a quick little bag. Then it becomes a game of what? Again, like we always talk about is what? Lot size. Is it times what? Times 1? Is it times 2? Is it times 3? You bought 10 of them. You bought 5. Those guys that bought that what? Way out there at the 427 strike, you know, when we probably had that double bottom, they might have saw it there. They loaded the boat on what? Them contract. They cost them 3 pennies a piece. 3 pennies, $3. And they made 100% on them contracts. They put in, they could have cashed out at 600. They put in 1,000 on rack. They could have cashed out at what? At 2,000. And on and on and on, et cetera, et cetera, et cetera. And they bought a ton of them too, because we looked at it, right? They bought a ton of them, right? They bought way out of money. They're really pushing that 430 narrative, right? But nonetheless, that's the way you have a profound cheat sheet right in your face every day with the option flow chart, option flow chain. And that's why I like to kind of what train around it or speak to it at least to add another layer of attention to you guys as what trading thesis. And some of you guys already know this stuff. Y'all ain't new to this stuff, but the importance of it becomes more relevant now when you go to put on a position. Like we're talking about for duration. You asked that question about duration. That's the duration of value that you assess within that that trend or that value of whether or not, you know, if it's going to be a 1 day, if it's a 2 day, you know, what's the case here, right? You know, that stuff matters, right? That stuff matters. Make sense? So, you know, we're not struggling with the ideal of what that looks like. You know, granted, once you are able to connect those dots, right? When you're able to connect those dots, it's definitely game on. All right. So, you know, I hope that helps a little bit, but that's the whole point of that, because you're doing all the above. You're saying this has to be in place. This has to kind of have a value, you know, within the schematic of you putting on your putting that into your thesis, right? And then you just see, okay, from there, you need what? The buyers to show up, the buyer to step in, right? Now, go figure. Remember, I literally posted that to y'all, said what, that 415 crossing was going to be a massive point of resistance there. I think I posted that on that too, right? Look at the contract sitting at the 415, guys. 134,000 contract was sitting at 415. I'm just following the money. I'm not doing nothing special. I ain't doing no magic, no Houdini stuff, right? I posted that. Matter of fact, I can throw it back a day. I posted that too, right? I mean, a lot of stuff you guys already saw yourselves. You were just like, okay, I'm moving, right? I'm moving. See right here? It was on this chart right here, matter of fact, right? That same area, right? Was talking about what? Somewhat of what? Supply zone to a degree. Right around that same area, that 415 is right there. I had an alert set right there. Y'all see that right there? I had an alert set for that. Right? Because at that point, I said, you know what? If I'm in at 4970 something, I got a hard decision to make. I'm either going to take profit at 415, 416 region, right? Or I'm going to let it what? I'm going to let it ride, because the only way I'll let this ride if I see what? Us what? Break that, right? We break that what? That resistance, right? That supply zone. It was a clear supply zone. Look right here to the left. Look at that, all that chatter right there. That's straight supply. Y'all see that there?
Mm-hmm.
That ain't rocket science. I ain't making that up, right? That's
show it again. Show it again. I want to look.
It's on the screen. You ain't showing?
No, I'm seeing. I got lost in the sauce for a minute.
It's showing.
I see it.
Hey, Oba, so what's the lowest support you can have?
Hold up, my pen just stopped working for some reason. What the world going on here?
Come on.
Oh, there we go. I'm like, why is this thing not? So right here, see right here? All this, what? Okay. Oh, the one that must be. Hold up, something ain't right here. 1 second, guys. Why's my pen out? Okay, there we go. Something ain't what's going on here? But y'all see it right there. That supply zone, right? All that right there was just over resistance, my point, right? For some reason, my pen acting uber retarded right now. I guess my CPU is fried. I wore the thing out with all you. But anyway, 415 became an ample resistance point. It's a supply zone. In order to what? To revamp a supply zone, you have to have what? New buyers come in and what? Take out all the people that's on the ass side. You need new bidders to step up, right? To overtake all that liquidity that was outflow that's sitting at that resistance that people waiting to sell at, and replace that with a new tranche of buyers. Well, what was the new tranche of buyers? Everybody that started coming in buying contracts at 415. Now let's go see what the 415 puts look like, because there's a level of liquidation too, right? You got to have some outflow in the same breath to a degree. Make sense? Hypothetically, what the 415 is going to look like? Y'all see them right there? 65,000 of them right there. Why was 65,000 put buyers sitting at that 415 strike put? Because they seen that same resistance that everybody else saw. They seen that same order block that everybody else saw. They saw the same supply zone like everybody else did. They put on shorts at around 416.15. For the same thing that we were looking for, right? To get that down they were trying to get that down flush, right? Back down towards that that 406 area of support. Some of them did they overstayed they welcome, and they got they getting pain right now. That came in today. That's not that. And look at it. Open interest up 8,000 was sitting in coming into today. And they sat through all that pain, and the thing gapped up, squeezed up above that, like instantly. That's why I said I'm not finna fight against the tape. I said I was like, hey guys, look at here, y'all might want to pay attention here, right? I can't tell you what to buy, what you can't buy, but clearly support was what's established. Y'all know the trend. When I put falling volume down here, I put stock rises on falling. Y'all know this ain't nothing that we will know this a million times. When you have low volume melt up, then in comes upward bullish drift. You have a double bottom even on RSI. See right here, my RSI, clear as day. That's a double bottom on RSI. You have ample levels to realize what's going on. You had a MACD impression, not a MACD, my squeeze momentum impressions, they went from what? Peak red to now what? Trailing off to what? Out of the red, back towards what? Potential neutral or going green. I'm looking at all these different things. My falling wedge in volume obviously equates to what? Bullets drift to the upside. Everything else at that point just became what? It became a game of what? Time. I just need to what? The Bulls bring it. See right here, even on the hourly chart over Brandon. If you see this here on the hourly chart, where is the 200-day moving average on the hourly chart for the SPY? Can y'all see that? It's in that 4975. Go figure. How important is the 200-day moving average as opposed to even a VWAP? Uber bullish. Let me get. I need to go get Thunder on here. Where Thunder? Let me get Thunder here, boy. Thunder said, when I see that 200, boy, we cross over that 200, boy. Look at it. I'm buying everything.
Oh, the 15-minute.
Look on my chart right here. This is on the hourly. The hourly had the 200-day moving average sitting at 409.75. Go figure. I had triple confirmation, right? I had a 20-day moving average there on the hourly, a 200-day moving average on the hourly, and I had a 15 moving average, a VWAP on the 15-minute. At around that same, 409, 70, 75, 73 range, whatever. I didn't hesitate. I got risk on there. I see people got them a double bottom support. I put some risk on right there. And I'm playing for what? Just that. 412, 15, first level of resistance. After that, everything above that is blue sky breakout until they what? Until something changes, because I know they're going to try to run it back towards what? That supply zone what? And bail out those what? Those call buyers who bought up there, or people who bought the commas up there. They did that. They chewed up all those put buyers, all those guys right there in deep pain tonight. Now they might get bailed out tomorrow, who knows? But right now, them put buyers at 415, boy, they suffering motor oil tonight. But they eating ramen tonight. They eating top shelf ramen with some spring onions and some hot dogs in it. Talking about some of this French cuisine. They eating ramen tonight. Shelf. That top shelf, but that top shelf ramen, boy. I think give y'all kind of sodium, man. Heartburn and high blood pressure tonight, boy. Them just sucking motor oil.
Okay, let me make sure this here.
So
by you looking at, and I noticed I'm actually doing. I just been chilling, just doing my support and resistance from the top down, and I noticed I was kind of looking at the futures last night, and I noticed now because I went home all day. I had to do it with my son. Once it broke over that 410 area on the SPY, man, it was on and popping, because that was the level that, and they tricked everybody yesterday because they making it think it held that level for a long time yesterday. That 410, matter of fact, I think it closed around that area.
4959. 4959.
Yeah, yep. It closed around that area. So, but I noticed I didn't have this 407 area because on the futures last night, it was hovering around that area last night on the futures, on that ES mini, because I'm kind of trying to put everything together.
Well, it's both. But here's the deal. You never limit yourself to one asset readout. You know what I know. ES mini, SPX, and the what? SPY are all correlated. The futures are just opposite ahead, right? That's why they call it futures, right? So it's typically, people always, well, why is the futures more expensive than the SPY intraday? Because it's the futures. So it's rated towards that what? Those future contracts, that value, so it may be priced at like $1 plus more. You can do the math on it and see what it is. But nonetheless, the support areas are granular, right? They are based upon whatever those other assets are, right? Because they are still correlated. SPX, I pull up SPX, it's going to look the same way. No matter how you look at it, it's going to look the same. See right here? To the T, right? Look at that.
Just to show you I learned, I had this marked down from yesterday.
No, it's well.
And I'm like, this thing here, man, is like magnets. It hang on the 450 around that area you talking about.
That's our same thesis. That is literally our thesis.
I got to start trading is what I'm seeing, because I'm in the area. Only thing I have to do is just trade it now. So I'll be listening to you and I'll be watching. I'll be like, man, he be knowing these areas, and it's like a magnet. As soon as they hit that area, it get a reaction. So I just got.
But you know this too, like I say, because you know, old school base case support resist. This stuff ain't rocket science in that regard.
Yeah,
Again,
it's not.
we're not fighting against the tape. In this case, when we say fighting against tape, because you know there's the same with that. They say you fighting against the tape. A lot of times that's what trend and what the price action, all that stuff in one, because you've been able to establish a point of what control. That's what any kind of resistance or support is another way of saying what it's a point of what. It's a point of what.
You say resistance.
Yeah, any kind of resistance or support is another of saying what it's a point of what.
A point of reaction, point of entry. You know,
a point of control. It's control.
Yeah. Everybody looking at this same area. So if I know
not rocket science. SPX,
it's not
resistance, support. All the way across that table right there. You is not finna get me to what? To bet against that. If we hit it multiple times and hold, I'll play that risk on there. We're doing risk mitigation, risk management all day, every day as investors and traders. That's within our rule book. We don't change that. We don't deviate from that. We play within the confines of what the rules say. I correlate that to any other asset within that what? That strong correlation of the SPX. It be the SPY, be it the Qs, right? Tech, right? Even though Tech broke out holiday, look at that. Convince me how that's not the same right there. Right? Same way. Look at how I respect the 200 moving average here on the hourly. It came back and hit that what? 308.43, launched from it. And you got that rounded top, flattened out a little bit, and then what? Squeeze higher up away from that point. No matter what asset you look at, it's going to have that same level of correlation. Whatever you trade, of course, that's going to be based upon, your lot, your money value, whatever that. But the rules are basically quite the same here, right? It's being able to map flow value, meaning, people who put their money where their mouth at already. You don't have to sit there and kind of, pimp, as they pimp the level two, right? We came from there, right? You have to sit there, watch level two like an eagle all day, right? Time and sale level two, what they looking like. Now it's like, okay, we're a little bit more, stationary. We come look at what? Flow chart, because this is the back door. This is what people putting what? Massive money on. We talking about tens of millions, $100 million sometimes, notional value, billions of dollars coming into the SPY before the day is over with. And you're seeing exactly what's going on. You got 181 contracts in the what? At the 410 strike alone, right? And look at it. These were the puts that were bought. How much of those guys down under? They bought these contracts what? Right? At about $1.90. They underwater what? $2.41. They down 82% on those on the puts. Underwater.
Yeah.
14,000 over the open end. Them guys right there huffing paint right there. All these guys here are sucking paint tonight. They struggling. On the flip side,
they might not get no help tomorrow because that last 15-minute candle, it was nothing but buys.
I said we close above that. Now that don't necessarily mean what? We still got what? We in the all clear because that was just the what? To give us a little piece, right? A piece throughout the night. So right here, I got right here what? Bullish drift, uptrend. If previous up intraday what high is what surpassed. We closed it, right? We had to close above it. I said if we don't close above that 416.24. Bro, I am not swinging my call after making that kind of what good little, little bread on that little what pump right there, right? Because that's a well-known what, old swing high. As the direction says right here, trend analysis says what? Close above previous swing high equals what? Continuation of what? Trend equals basically what? You still in an uptrend. Old swing high, break above that, close above that. We trend higher. What happened after hours? The market what? It kept trending. It squeezed actually into the bell because y'all know the SPY has a propensity of waiting that last 5-10 minutes when imbalances come out. That's why they always do the imbalance at the end of what? End of the market. Last 10 minutes, a lot of buy orders came through at the end of the day. Paired off with Apple. What else? It was some other tech stocks that got some good imbalances came at the end of the day. It was a buy signal. And if they're on the tech sector alone, especially that alone tells you that what? That's going to fuel what? The SPY. And a lot of them came in for the tech sector. So everything from that point on was like, okay, I'm good to go. Why? Because I also have the what? The ability to sell my what? SPY contracts after hours. How many minutes do we get after hours to sell SPY contract?
I didn't know that.
Yeah, you supposed to know this. You get anybody know what we get? What? How many extra minutes do we get after hours to sell a SPY contract?
Yeah,
My
don't
thing
it
ain't
8
messing
o'clock?
up too. My thing is messing up big time. I don't know if it's a system or
8 o'clock.
my computer. Market close at 4 p.m. You can trade the SPY
8 o'clock.
market in relation to the futures for an
Is
additional.
it 30 minutes?
Say again. Somebody about to say it.
I was gonna say 30 minutes or not.
Close.
15.
There it is. That's the
15
market
minutes,
I trade off for right there. Now y'all see why I trade that 15-minute lot too sometimes. Thank you, Overrich. All right. You get 15 extra minutes. I bought contracts several times at 4:14. I bought sold contracts at 4:14 a lot of times. Sure will. I took that thing all the way down to the last second, but I'm like Scottie Pippen or Ray Allen in the corner. Boy, give me clutch. Clutch. I'm out of there, bro. Let me lock that bag in. Y'all ain't finna get me tomorrow. Or I swing it into the next day because now, guess what? That whole entire option contract is protected at least up until what, 9:30. I just got to get through pre-market foolery. I get through pre-market foolery, I'm good. That means my risk assessment has now been what? Protected by what? The value that retail can't mess up my what? They can't mess up my flow. And the same thing would be on the institution side, right? Because again, if they took a bullish sentiment into the close, chances are they'll have continuation unless something else comes out after hours or whatever to change their thesis. Make sense? They always gonna try to play the game of risk on right now because they've been beat up lately. Right? Institution lost a lot of money. Right? They definitely want the market to go back to the upside, right? So hey, the onus is on them, right, to turn the market. I'm saying, look, I'm an equal opportunity trader. My long-term portfolio values and trades and me adding money to those, I'm not touching them. Well, you might have missed out on the bottom then if you ain't bought a 380 and bought your Apple at 136. Okay, Apple's sitting at what right now? Right? Okay, yeah, Tesla hit 624. Now it's up to 770. Okay, yeah, but here's the deal. Right? They still got what coming up? Tesla got what coming up? The idea that they got an earnings coming up, right? They got to deal with all that kind of stuff that, it's a lot of things going on with the market. They still got, interest rates coming up. They got, so yeah, these bounces are going to be, in my opinion, they're going to be just as reliable as the market data will allow them to accept these little small term pivots and swings. No more, no less. It does not put on the level of conviction that makes people feel like, okay, the market is back, right? The market is back. Hold up. No wonder I couldn't write on the screen. I had the doggone thing set for that small screen. No wonder. My bad. So yeah, until something changes where that's not the case, everything we've been speaking about today in today's session is just dealing around what everybody on here have to be comfortable with learning how to do is read trend, right? Because then the trend is your friend. That's more than this, a saying. It's not a colloquial saying. It is reality when it comes to money. It is the reality when it comes to industry change. Again, where the money at? You get in trend. You get, with the pro. Not all things, but y'all know what I'm saying when it comes to what we do. It's trend, right? So all this was just to kind of set up for what we've been trying to deal with the marketplaces. When we're bouncing and hitting these demand zones, order blocks, whatever we want to call them, guys, they're all synonymous. They're all the same. They're all the same. No matter what they are, they're all the same, right? There's a point of control. Hence, Wall Street would like to have it, that be that. And then there's going to be a respective value of buyers that come in and play off that, be it an indicator, again, a trend line, right? Or just value of what price action value alone. Again, big candles like this here, bullish engulfing. I'm not arguing with that. That is not no retail money right there. Down money, bro. They ain't got enough peanuts and money in the coffee can to make me believe that's retail, bro. And then you shot all the way above a massive moving average, came back, tested it. There's your confirmation. You get long. If you didn't get long at the 20, you get long at that 200. Now because your risk profile has just not been confined to that 200 moving average, or the next massive moving average down if you want to put on that level of threshold of risk, right? So you either got a 308, right? 308.20, or you got a right? If you want to play all the way back down, that's a lot. I wouldn't do that far down myself personally. I'll just play all the previous candles to kind of give me an understanding of what they would look like. Right? That's what old money may be sitting in them at, right? So you split it and do it like maybe halfway 306 or 307, whatever. Either way, that's up to the individual trader what they want to put on for the risk. But support resistance, non-negotiable, right? Support and resistance are non-negotiable. If they've been back tested, they've been here before. I've been here before, right? I'm not arguing with that. If you argue against that, you're gonna lose. Why? Because algos are sitting there like, okay, at certain said point, pivot, we put on what? Said what? Lot size, order what? 1,000 shares at every what? 5 minute what? 5 minute interval. If we stay at or above that what? That pivot point. And you'll see it come through the tape, right? 1,000 shares, 1,000 shares. You see it pop up on level to like, who these 1,000 share jokers is? If they don't do it that way, guess how they do it? Most time they do it through what? The dark pool, right? These people but they slick, right? But they know how to what? Put a flow underneath the market if they can turn it, right? It could be 100 shares, right? Every 5 minutes that algo would buy, right? Every 5 minutes above that certain pivot, it's going to buy 100 shares. And to that what? That lot size of that tranche of money that's slated for that to come out is what? Is fulfilled. That's going to put pressure on anybody trying to short that area, right? Then you're not going to turn that against an algo. And what's going to cause is going to cause them to what? Get squeezed. They're going to get out. It's going to cause the stock, that candle to what? To stretch, right? Basically, it's going to stretch out, right? So it's little stuff like that, but nothing that you guys don't know, right? Nothing that you guys, don't already know, or not that you're learning it to be able to read it and you don't struggle with it. So tomorrow, everything that we've gone over here today, even until next week, right? Up until what is our date? What is our go date, guys? The one date we're all waiting on is what? What date we're waiting on? Right? Fed Day, right? Yeah, we even got a video out there called the Fed Day. That June what? June 15, right? The rats will come out and play when the cat's away, right? Right. So Wall Street gonna do everything in its power if it can, because it still got to fight this economic data too, right? There's always contingent plans. The reason why markets just don't just do what it want to do. They got to deal with that mountain of evidence, whether it's compelling or not. But that's our next 50 bips, right? Rate hike. That's our other aspect of confirmation on the balance sheet runoff on QT, right? There's 47.5 billion, right? 47.5 billion, right? Be it the mortgage start then, I don't know if it started out, but I'm gonna go look that up this evening. But nonetheless, it's also they're gonna put that the oil store behind it, right? Because they got to get out there and get for the press and all that, right? What they speak to, right? This whole idea, this whole September rate pause myth that Wall Street is using right now to also pump the market. Brainerd somewhat quiet that today when she came out and said, it'll be hard pressed for them to pause rate hikes and fighting inflation right now. Markets use that to run off today, though. They use that. They misread her quote, but they always gonna misread the quote because y'all know how this stuff go. Once money gets infused into the market, you can't rescind it and pull it back. Right? Nothing you can do about that. I just get along with the trend. I'm not gonna fight the trend. If they're gonna play dumb, I'm gonna play dumb right along with them. Right? That's the name of the game, right? That's just the name of this game right here. Right. So that's about the nature of being able to assess the trend value or the importance of it. Uptrends, downtrends, continuations. Continuations are definitely very important when you have a supply zone established and or that of a what? Or demand zone already established. The trend value of the continuation becomes very monumental. So fail to close above a previous swing high equals a potential change in what? Trend. It could be denoted by a candle. It could be what? It could be a doji. It could be what? Gravestone. All these different things. Y'all know we've been training on these different candles. It could be a lot of different signals with that. But nonetheless, instantly I'm saying, okay, we done marched off a major support up to a major resistance. We can't close above it. I'm missing buying what? The puts, to kind of play the pullback with the risk factor, knowing that there's ample weakness at that resistance point. I'll let the market shake me out that trade at that point. And then at that point, I'm still not going to be just sitting in it you know, if they're going if they're going to buck the trend against me, I'm just going to sell and get out. I'm just going to sell and get out. But I did the right thing by what? Accepting what I saw, accepting the trend, the reversal, whatever, or the weakness, or the failure, or the supply, right, or the resistance, and then I let let the chips fall as they may. As a trader, that's what I'm doing. Again, the long-term game that we've been speaking about, that's just universal. You kind of know when the market's kind of showing favorable value for certain stocks or assets, or different classes, sectors, whatever. Given that sector kind of has a massive drawdown in a way where you kind of flushed out a lot of that the froth, right? PEs then came down substantially. If you sit at 100 PE in your growth stock and you got rev, let's say maybe 200 million, right? But you got a market cap of 15 billion, like that wouldn't even make sense, right? You got 75 cents on EPS, right? With a $20 billion market cap. Like, get out of here, right? That make no sense, right? You overvalue, right? And if you put out that little bit, level of ample revenue, it's just not going to make sense. It doesn't work, right? But again, that stuff got to get flushed out at some point in the markets. When that happens, then you'll know again, you'll have a semblance of feeling like, okay, the market seems to be pretty decently cheap now. We flushed out a lot of the fraud. We may can start adding on some of these long-term positions, nibbling in, of course, right? And playing, any kind of change of market sentiment based upon economic data, because I'm a big proponent of organic data, being to read whether or not money is good money or not. Right? I don't want to put good money on a Looney Tune market still. It just don't make sense, right? There's nothing proven to me that is worthy to receive my money like that, like on add to my big positions. All right. So yeah, so trend analysis is very important. So keep that in mind. I'll send this out, guys, if y'all want this little here. This is part of one of the ones I was going to send you as well. Over Richard.
Yes,
right?
sir.
I'm gonna send this one to you, man, because this one here is just on that. It goes into, and it's another one too. I got a couple of them seeing. I had to go through a few of them. I was struggling a little bit too. I like, where my ones on the futures there? I need to go put them in chronological order, but this one here actually deals with that too. With the futures, right? Obviously, it gives you a whole value of technicals and a little bit of fundamental characterization as well, right? So it'll help with that. And I have another one I'm gonna see as well. As you see, it deals with the CMN minutes, right? The NASDAQ, this, that, third, kind of giving you the understanding of what that looks like in terms of different trends. And the same would be if a person is trading Forex too. It kind of gives you those same levels to look at in terms of the currency values, right? On both sides, right? On both sides. And it's more of in a case study form too, right? Because it has the questions that you can see there, the different values.
Send that to me too. Send that to me. I need that.
No worries. I'll post it. I'll send it out there. And again, it goes into a lot of different, values of how you would trade into a particular range value on the contracts. How you would look at that. As we say, through the value of putting together a trading strategy within that, through a distribution range or whatever. What contracts would you buy when you would sell, potential value of what you would sell at. It's all relative to that regard of being able to kind of move within that futures market, right? Or just Forex in general too, right? So it's a lot to it. So just one a minute, but I got some other ones too. So this is just one to start with, and a few others. Some of the stuff you already probably know anyway, but it's good to start building back your scenario, like you was telling me, build your archive up with some of those different data points, right? So it's a lot. This is one here about 120 some odd pages. Ain't a whole lot, but of course you see it deals with dealing with building your e-mini trading strategy, right? So if you want to get into trading it. Some of those e-minis, and there's a couple other ones as well that I have. All right. So that's it, guys. So I'm gonna get out of here. I want to be done at least by 9. The latest we went hard. They went a little longer than usual. All right. We've been going since 4, but we was in here early. Some of them in here early at 4:30. I know some of y'all had to get out of work. I said, I gotta wait till the family get in here. I know y'all gonna be busy. But we got it in. I hope it was again very informative and useful as always. We know what we're dealing with here, guys. We're dealing with a marketplace that's still trying to work. It's in the I think I can mode, right? Like with that old school fairy tale, I think I can. Was it chitty chitty bang bang? Right, old school, but some of y'all remember that chitty chitty bang bang. I ain't gonna take y'all there. But that's what the markets are dealing with right now, right? It's definitely, trying to force or jailbreak its way, into making everybody believe that it's, everything's all clear. I'm just of the mindset that we're just going to trade what we have in front of us in real time. If you are a long-term investor, just be patient, right? Just be, play the game of being patient and being able to read and assess trend thoroughly in a way where you feel confident that, you're having ample levels of what, demand zone values are starting to build, right? A foundation, right? In certain assets. And it's still dependent upon, again, other data points along the economic side of things to mirror that. If we are somewhat of an all clear, or this one particular set just stands out so much that it has reached its particular bottom individual value as opposed to a bit of collective. Make sense? All right. So we're going to work off those things and those things only. All right. So that's it, guys. So I'm going to get out of here, guys. I appreciate you guys this evening, as always. The family, right? Everything that we do here, what we stand for, as we say on Bantu, I am because we're going to get this stuff one way or the other, right? They say, come here, go high water, right? We're going to get this here. So yeah, we're going to get it. So y'all already know what it is, going until tomorrow. Tomorrow is the expiration date. So, you're going to have some people trying to buy that 0 days to expiration. Right? Somebody will get out there and try to day trade the word, right? As they say. But just be cautious of that again, they got a small window. They got now, let me see, well, it ain't that small. They just the second, but they got up until the 15th to kind of pull a rabbit out the hat, right? If the first notable zone they're trying to take out is 420 and potential 430, then those become target areas of durational bias. Call buyers, start watching those levels, right? If you are the mindset that they're thinking like that too, that stuff ain't hard to go look at that. Again, just go check those contracts, guys. Get in the habit of going out there on bar chart. Go look, well into the next week, right? If you even go to next week, right? We got what? We got 6th, 8th, and 10th next week, right? The 6th, 8th, and 10th, right? So the 10th, right? Bakes is what? Next Friday, right? We can almost guarantee there's a lot of people buying what? That 420 strike call probably for what? At least next week, going into what? FOMC for next, what? The 15th, which is the following, what? Was it Thursday? Right, they're gonna find a way to try to make that 420 hit. If they don't get it tomorrow, they're gonna try what? Either Monday, Monday or Wednesday. All right. So really quick on the way out the door right here. Right, this right here is next Friday. This is next Friday, right? Look at that 420 right there. Stop playing. We don't make this stuff up, right? We ain't making this stuff up, right? Y'all gonna learn today. Y'all gonna learn today. Look right there. 10,000 contracts were bought today. 21,000 were already on the open interest. That was in there from yesterday. Them jokers up right now 100%. They bought them at $1.90 cheaper, right? $1.90 cheaper yesterday. See, that's strategic, smart investing. Once you figure out how to play pivots, and then you ask that question over Luther, you get long duration based upon levels, giving yourself time, delta, theta, the whole nine, gamma rho, all this stuff kind of play in your favor in this case. But for the most part, you're using trend, right? You're using trend analysis, bullish sentiment, to help you with, managing your risk. Let the market pay for your moment, right? Let the market pay for your moment. All right, so that's it, guys. So I'm out, guys. So thank y'all for tuning in as always. YouTube, appreciate you guys. I hope y'all enjoyed as well, everybody. Over Sunline was in the building there. I see you in the building. Our brother, the chart stalker, we see you in the building. Family Future Fun Show. Thank you for being in the building today, man. Shout out to Dollar Will as always. Hold it down over Dollar Will. Go subscribe to his YouTube channel, guys. Over Marquise in the building. Definitely check him out, our brother. Everything. Of course, everybody in the building here on our side on the Zoom panel tonight. Again, thank y'all. Over Luther, over Sonny, over Dodger, over Brandon, over Rich. Be in the building. Over Jeremy came in the building a little bit, right? Over Chris, over Brandon, over Dondre. We got him twice, of course. And now Ilba Angie was in today as well. Thank her for coming through as well. Shout out to our sister Monica right now. She's in the midst of being crazy busy as always too. So we always want to think about our sister too. And everybody else, right? Everybody else, the whole family. Y'all know what it is. So We appreciate you all and what your guys do for the groups, discords, this, that, and the third. Keep building, guys. It's us against the market, right? We ain't the apes, right? Right. We ain't gonna do that crazy AMC stuff, but right. But our value is being able to make good decisions and get our money the rightful way. All right, that's it, guys. So I'll see y'all in the next one, guys. Peace, power, profit. Be safe, be well. And y'all have questions, hit me up. I'll get this PDF sent out to as well. And so you guys I had like 2 or 3. Go ahead. Oh, I'm sorry.
Yeah, I just said peace, power, and profit. Over. Thank you.
Oh,
again.
yeah, thank y'all. Peace, power, prize. I bought a shirt today.
Profit.
So again, shout out to everybody again. I'm still
Oh yeah,
for my shirt, man. This is the shirt that the family put together for me. Kiana obviously is a shirt, in the shirt, t-shirt business. So shout out to her and everybody that went in on this. Open Chris, you guys, Open Marquise. I'm grateful for my shirt. I don't wear it much. Y'all notice that, right? I don't want the color thing. I don't have to keep watching it.
Yeah,
I'm gonna put that jug in the frame at one point. Then we're gonna get some copies made because that's the whole goal. I want to get copies of it made and share them with you guys, right? So we all, now they have to be this, but it's very instrumental because y'all know it. Every word on here builds the content of Africa. So it has everything that we talk about: peace, power, profit, family. I am because we are on Ubuntu. All our little talking points to a degree. Some of them, right? Discipline, right? Discipline, due diligence and discipline equal dollars and all that. It got all those words built on here, right? So this is something that we definitely stand by. So we say we brand ourselves with what we stand by. So this is everything that I've really enveloped. So I'm humbled by that, right? So shout out to Eva, Kiana, all you guys that went in on this as well. I'm still grateful. I can only tell you so many ways. I'm just super grateful for my little shirt. All right, so thank you all. All right.
Absolutely, Elba. Thank you.
Thank you all, guys. So I'm out, guys. Y'all enjoy the rest of y'all evening. Go pocket watch the future tonight. I'm gonna be pocket watching it indiscriminately. Right, cut on me a little show in a minute and pocket watch these future tonight. See if we're gonna act retarded tonight. Right. All right. Well, that's it, guys. I'll see y'all in the next one, guys. Peace, everybody.